Yeah, right.
Hey, man.
Ever used that Connected Investors website? Have you heard anything about that?
I mean, I've heard people complain about it. But
Okay.
I'm not saying that it's I've never dug into it. I think they try. Are you talking about using it to get private money?
Yeah, I'm trying to, so I started looking around. I called around to a bunch of the local banks and I talked to one that might be interested, but he thinks they probably just want to lend like right in the immediate vicinity of his bank, and they're about 40 minutes south of me. So he said he's going to check and let me know tomorrow. But
Yeah.
most of our local banks really don't want to touch fix and flip stuff.
They never do. I mean, banks are brutal anyhow to go to. I wouldn't use banks as like your first like backup source
Well,
because
another investor that I have actually uses this bank, and
okay.
he's done 2 deals with them, and they keep one. He's refinanced his rentals with them, and
Hmm.
on his flips, they got him at 3/4 of a point and 4.6% for a 1 year loan. It's
Well,
crazy.
I would go ahead and start that relationship, but I wouldn't like if you need to close a deal sometime in the near future, you might not. Those relationships take a little while to get together. The
Yeah.
bank
So right
sometimes.
now, I'm gonna have to use Lending Home, I think, because I got those. The one deal is supposed to close Monday,
Oh,
so unfortunately, I
but
don't
did
have
they
much.
they change the rates on you after they had already gave you a commitment?
Yeah, these 2 deals were under contract back in the beginning of March,
Okay.
and they just did this blanket email yesterday.
But even though they had already given you a commitment, they changed their commitment essentially. They didn't even honor the
Yeah,
original rate.
the loans are already in their system and everything, and they're not honoring it. They're changing it. So I
Wow.
looked at it. So what they did, and I did, and this was, I talked to the guy a little bit more. So I was at a point and a half with them,
No.
and 8.5%.
Okay.
They took me to 10%, which over the course of the loan, that only changed my total interest like $700.
Mm-hmm.
So that wasn't really anything. But then I actually dug into it a little bit, and a point and a half on a $200,000 loan was 3 grand. And now they were going to charge me 3 grand in points.
Mm-hmm.
And what he said he would do is he would take my points down to 0 since they have to do this new $4,000 fee. So
Oh, okay. So that's not too bad then. That's
yeah,
only a small
basically it's
difference.
going to, yeah, between the higher interest and them washing my points to 0, but adding on this $4,000 fee.
So they're just basically saying that they need to make 4 grand per deal because obviously if they're adjusting the points, then that makes sense. I thought they were still hitting you with the points and putting the 4K
They're
on.
going to. He's doing this as a courtesy because I do have these in the pipeline already.
Oh,
But
I got
in
it.
the
Okay.
future, yeah, in the future, they're going to hit me with all this stuff.
Future, they're not going to be here, so I wouldn't worry about it.
Yeah.
Seriously. Future, they'll be out of business if they're doing that because guess what's going to happen? And plus they'll change it as fast as everyone else changes it. So, they're making this move, but 2 months from now, they'll be backpedaling and begging for business. And you just hit them harder. You're just like, hey, nope, dude, I need I need 7.5 point. That's what Alex is getting. Alex is getting 7.5 point.
I
I'm not
think
saying
aren't
I'm
his
sure
loans a lot bigger though?
no, they're not any bigger than yours. I'd probably say they're similar to yours.
I wonder who his rep is out there. I hope he jumps
Ask
on the
them.
call today because I'm
Yeah, or,
curious.
or hit him up. I'll send you his number to hit him up if you want.
Yeah, because I even told my rep, I'm like, I know a guy out in California that's getting substantially better, and he's like, oh, we got some pretty high dollar loans out there.
They're not his last rehab he sold was $400,000 ARV. All of his rehabs stay very like 350 to 450
Wonder if
ARV.
he knows somebody at Lending Home.
No, he basically got somebody else to offer it to him. He was doing the same thing as you, like 8.5 and a point and a half, and someone else offered him 7.5 point, and he said, you know what, I was going to go with the guy, but I thought let me send it to Lending Home, and they matched it, and they took it to their manager and matched it. They'll only
Okay.
go super low if you like kind of force them to do it. Essentially, they're not volunteering it, and they're not going to give it up unless you essentially are just leaving them. Right.
Okay.
And now he puts a lot of money in. They make him put like money down and all that, which is fine. But so do you. You're not like asking for 100% of the loan.
Yeah, we fund all our own rehabs too with our private cash, so I'm not waiting on draws.
Yeah. Well, there you go. So with that being said, I don't think now's the time to try to negotiate them. Like,
No, it's not. I mean, these two deals, one's supposed to close on Monday and the other one's the middle of April. So worst case, it changes my profits on them each about 1,800 bucks. So it's not, it
yeah.
doesn't implode the deals, but
Make
as I
that
go,
up. Make it up and get something done cheaper is really the best way you can probably do that. I mean, you should be able to get somebody to do work cheaper at this point. Like, not saying the guys you're currently doing, but maybe you could just squeeze a few things out to get done a little cheaper, and you should be able to make that up for now.
yeah. Now, where did you, the guys that you're working with, or like what other people in the group doing for funding for capital? 'Cause I know we've got some private,
Oh,
some,
the one guy, everyone's private. Everyone, when I say private, everyone is doing hard money lenders, right? Not banks, because
yeah,
the perfect middle ground for me is a hard money lender who's is like it's their own money essentially, because they have control over what they do, just like your private lenders, right? They, if they're not freaked out by this, they're just going to lend. They're not a board telling them what to do. Lending home, there's a board telling them what to do. The banks, any banks, there's going to be a board telling them what to do. So the
yeah,
thing I hate about banks, so people think I just have this opinion, but I've done banks, I've done hard money, private money, I've done it all over the years, right? And why the reason I've landed on hard money, like personal hard money, I think it's the hybrid of both a bank and say like a private investor, right? Private investors jump out, they get skittish, they change their mind, and they're brutal sometimes, right? They're a little bit tough because they can jump out on you. It takes a really strong relationship with someone who has money to really have them in a place where they'll lend to you and you don't have to worry about it. So I never had time to really build those relationships. I built them with a few people, and it just always seemed like a lot of energy and work. Well, I just want to focus on getting flips, like buying them and doing them, right? The banks, like you can take like 6 months to create a relationship with a bank, and they're like, let's do it, and you could do like 10 deals and everything's great, and then they just randomly be like, oh yeah, our board decided this, right? We don't want more. We want to cut off the rehab loans, because what happens is when they open it for you, they open it for every other asshole too, and then they don't pay them back, and you do, and they never look at it like, oh, let's start lending to more rays and stop lending to more goofballs who don't pay. They never
yeah.
look at it, so they just shut the whole thing down. Lending home, same thing right now. They're all ran by money they have no control over. So what's cool about more what I'd say, like Jay Dakin's my lender, Gary Zinsky's my lender, Brooke Kane's my lender, right? These are all personal names, not like fast cash, get it now money place, because those places are always like using other people's money, and it is definitely done by that. Dominion, from what I know, is ran by private money they have raised, and lots of different private money they've raised, and they generally have a hard time deploying it all. So there's a good chance, even if they are losing people, they're likely going ahead and they're probably still lending, right? It would be my guess. They were 9-2. I wouldn't even worry. I pay like 10-2 with my other lenders because I pay for peace of mind, right? I am not worried about $1,000 or a couple $1,000 in fees. I'm worried about having someone that'll perform at all times, always, even in any economy. Now, my one guy might be out. I don't know. He sounded like he was going to cry when I talked to him last time. He said this is going to be the worst crash he's ever seen, and he's going to be 17 times worse than 2008. By the time I was done talking to him an hour later, he felt way more comfortable. And he's like, okay, let's just remain humble. I was like a suicide hotline for my hard money lender. It really was. Seriously, dude. It was like, and this guy's worth about $8 million, lives in New York. He moved to New York recently. Good friend, nice guy. He's a lawyer, but he's always been emotional, right? He's always definitely been the emotional type. He likes to call me and ask like the war between Iraq and Syria. Do you think that's going to affect cost? And definitely one of those guys, right? And I'm thinking like, what are you even talking about right now? Even this, he's like, so I was like, hey, would you like me to give you some feedback on what's going on the streets? On the streets, it's insane, like everywhere. And every day I'm talking to people. I'm researching and talking every day, and that probably won't stop for the next 60 days at least. Right.
Okay.
I'm gonna keep my eyes very, very close on this, because look, any way I look at it, it's not because I'm like, I'm gonna get out of real estate, because look, I was doing this in 2008 when this shit was at the worst recession we had seen in 100 years. And I was making money in 2008, 9, and 10. Right. And I've just done a lot of research that literally it's called the Great Recession. You have the Great Depression. If you look up like all the recessions or, big financial events over the last like 200 years, well, there's the two biggest ones. Guess what it was? The Great Depression and the Great Recession. The Great Recession is now the new name for the crash of real estate in 2008. It actually has its own name, and it's bad. It was messed up, dude. But the thing is, it was messed up. But the reality was there were still a lot of people making money flipping houses. It definitely cut out the fat. It got rid of the goofballs. It got rid of the people who weren't doing what you're doing, who weren't, like think about the additional money you were paying in the past, right? They're buying deals better right now. You're paying less to your contractors. You're very in control of your deals as far as like, you know what I mean? You're not overwhelming your flow. You're doing so many things well. And all these things that I mean you've been working on is come from a very deep-seated personal belief that there's going to be another recession, and I don't ever want to stop flipping. I just want to go right through the recession like nothing's happening. So minor adjustments, right? We're gonna have to adjust, and we'll keep adjusting every day, man. Every week we'll be talking. If there's anything important that comes up, I've already put in plan. I'm doing like a panel on Wednesday if you want to jump in with a couple other people. I got Steven from the group, and he's like mindset. He's got his mindset stuff, and a guy named Roger Blankenship, and a mortgage expert. So just talking with everyone, right? And I might even do those every couple of weeks because I think
Are you sending out a link for that tomorrow? Is it a Zoom call?
yeah, I do. I should have already sent. I'm going to send a text message to you.
Okay.
Should get it actually tomorrow.
Okay.
And you should already got it. Or no, I don't know. She'll be sending it out sometime. The text message for the panel. Can you send it out yet?
Oh, I didn't send out. I'll send out. I've been sending out all the emails and stuff. I'll send
Oh,
out a text message with it.
Send it the day so they have it.
I'll
And
send
then,
it. I'll get through.
well, you know what? Okay.
I've just been sending out the emails and
Yeah,
posting
yeah,
it.
yeah, yeah.
didn't
I got it.
think to
The reason I
send
was
it.
saying maybe not today is because they get so many other text messages. They might get it confused with the other ones today. Why don't you send it tomorrow morning and then send it an hour before?
Okay.
Send like 8 o'clock tomorrow and
But
an
it
hour
is on
before.
Facebook.
I got it. Okay. It's on Facebook too if you want to go there. But so I'm doing a lot of this stuff for a reason because look, we are very prepared. Especially you're in a super unique position to take advantage of this, and because you're able to jump in and do what you got to do, man. So like, look, right now your money guy dried up. Okay, your money guy was probably going to do that sometime in the future anyhow, because like lending home and national companies suck, right? I mean, I'm not saying that they didn't give you a good deal and they're not giving Alec a good deal, but my whole thing is I hate building a business around things that might change. So I really do try to build relationships and business around things that I know will go through any economy. And I already knew lending home. I've seen it. They're so fickle, right? They're so dependent on every little bump and grind in the economy. Little thing happens and they're out. Essentially what they're doing now, right? They're lending, but then they're like, how is it making it more safe for them by charging you more money? So they're doing this to take advantage of you. This isn't to make their
Well, he
business.
said that on the call. Now, he said that. He was up front. He's like, they don't want to originate new loans. They want to wrap out what they have. They don't want new business coming in.
Yeah, well, but they're taking it and charging you on a premium for it.
Yeah.
So they apparently want it. I get what they're saying. They're just saying if we're going to take it, we're going to make more money. I get it.
Yeah.
They want to see what's going on because look, and they have to, by the way, because they're controlled by like institutional money, right? Institutional money is controlled by the stock market. So like the stock market could actually crush them. We could have a crash somewhere else and it could actually stop them from being able to lend. People that lend their own personal money is what I'm really into. So I'm not saying you need to give all your business to them, but I would probably recommend creating a relationship, and this becomes the perfect time to do so, right? Just someone that's going to fund your deals, right? I mean, I know you probably felt 100% certainty you could get funded, and now you're probably feeling like not quite 100%. Probably in the back end, you could probably work it out, but there's some unknown right now, right? You're probably wondering. I have scheduled 9 people that I'll be calling over the next day or two to interview to get information from them, whether they're lending, what their changes, just really interviewing them. Also just, having them for the group so people know and see if they're still making loans and what's the difference. And
Now, what drove those conversations, or where did you build that list from?
what's going to drive the conversation is you actually were what drove it. When you told me about lending home, you gave me that information. I realized that, and Jack's been talking about it, Dominion, but he hasn't talked about changing them. But everyone's going to change their rates because most people are just going to change their rates based on the fact that they can get more money. The reason they were giving such insane rates, they had no choice. They were forced to. They want to charge you. I used to pay 13 and 3. That was like a standard rate. They want to give you an insane rate because they have to steal you. It's the only way they can win your business. So now that some people are jumping out, then guess what? It's the opportunity for them to raise their rates. And then what they're hoping for is when everything gets better and there is no scare, that they'll be able to ride that wave a little bit for a while until people start making them lower the rates. Like they just are going to lower the rates back to where they need to be if people make them, period. That's how it is. So they've been lowering their rates every month or two just to kind of keep pulling people in, sucking them in. Oh, you left us. Come on back. We'll give you a better rate. They've always had the ability to give low rates. So they have the ability not to change this too if they wanted to. But what they're doing is they're taking advantage of this situation. period. Because if they don't want to make loans, they would just stop making loans. They would clear out the loans they have, and then they make no new loans. Like, hey, Ray, we'll do the loan that we're going to do for you, but after that, we're going to take a break for and reassess, and that would be fine. But no, they're like, no, we're going to charge you more. So anyhow, they worked it out. But what they really don't, people are going to stop using them, and people don't want to use them anyhow because they're, they initially they are harder than working with like these personalized people. These personalized people, man, once you get in with them, you do a deal or two, or you got a track record. You've proven yourself, man. They'll kind of just like write blank checks for you. So it's nice to have them when so that's why I keep my two guys. And I also have worked with Lending Home and Dominion because they are my institutional people. But I like that. I think who's going to end up lending, maybe it won't be my personalized guys. I don't know. So what I'm going to do is I found where I got the guys from is I looked at every person I've ever done a loan with over the years. And I looked at some people that some of my students had done a loan with, right? And I'm going to call them, just talk to them, just basically interview them. I'm trying to get some general feel information, like kind of what is your company doing? How are you reacting? I'm assuming it depends on the CEO of that company, right? There's some people that are scared shitless, and there's some people that everything they do is out of control. And there's some people that are going to be like, saying, hey, I don't know what we're doing. But what I can tell you is the thing that's going to really help, Ray, is the president has come out and he's starting to talk differently. Like as of yesterday, he's starting to see a big change, getting people back to work. And the fact that he's talking more about that now, and he's talking about like the actual outbreak, he literally every day now is talking about getting people back to work, talking about shutting the economy down being a much bigger problem than people getting corona, right? I mean, he's starting to have some real conversations, and
he's getting real data now, and he's realizing that he bought into it because he didn't want to get slammed for not taking any precaution. But I think he's realizing now, I don't honestly think, I wish he would limit some of the stuff that he says sometimes when he gets a microphone, but I definitely think he's alert and in tune with, he's got business sense, right? Like he's weathered ups and downs.
Yeah. Yeah. Actually, I've listened to a bunch of stuff and talked to a lot of people, and I just keep doing it. And it's interesting. All the people who are in the stock market heavy right now are like laughing. They're laughing, dude. They're like everyone's like, are you selling all your stuff? They're like, no. What, I look like an idiot? I'm not selling all my stuff. Like, why would I sell my stuff in the low time when I could just wait 6 months to a year and sell it then? Mm-hmm. Why do I take 30% cut on what it's taken me 10 years to earn, right? Or 8 years or whatever it's been. And you think I'm just going to give it back because of one little scare? Like everyone is 100% conclusively knows that once we get control of this, we get back to normal life. People are ignorant. Even if this thing was a big deal, people will start just being ignorant around it. People just do that. People get used to something, but when something's new, it's scary. So I'm calling all these people because I want to kind of get a real true sense as I'm speaking with everyone in the group. What is going to be our, every time you do this, right, you got to pivot. So what's our pivot? And it might be that it's business as usual, but I'm going to think it's not 100% business as usual. And, who's willing to lend, who's willing not to lend. And so I'm talking with every person I've ever worked with and a few people some of my students worked with, and I'm going to interview all of them by the end of the week and just get a sense. And then, some kind of get an overall sense. And depending on how bad it is, then we might have a more aggressive plan to go get money. That might be our number one thing right now. Instead of trying to find deals, it might be finding money.
Yeah, I just need no honesty. I would love to find somebody just that would want to, because I've already looked at our numbers like on the money board, and I just need to find somebody that would finance the purchases, and then I would give them a mortgage, a first position mortgage, because we have in private capital, we have about $650,000, which is more than enough to put the money into each deal if we have to cover our cost, and to fund and hold on to the carrying costs, about 5 to 7 deals, which is that's the amount that like me, you, and Hannah have talked on the calls. Like we always want to have like 5 to 6 deals somewhere in our pipeline. Like one's under contract to sell, we're working on 2 or 3, and we have 2 under contract to purchase. So we have the private money, basically checkbook money on call for the rehabs, but I want to find somebody that would love to basically have a first position mortgage recorded against the property and just buy in and just own the homes and get the money back with interest when they sell them.
Okay. I can tell you right now that in the worst time in the economy ever, which was like they said that was basically March 2nd, 2009, is what I found in research, is like that was the absolute complete bottom of the stock market.
Okay.
At that time in 2009, there was people that were lending to us, and yes, they would do, usually there was people still at like 13 and 3, they were a little higher, but they would lend even then. And but it was more private people, not institution. Like the institution shut down when this kind of stuff happens, because they just aren't controlled by people with sense, right? They got to do what the stockholders want and all that, and they just do crazy shit sometimes. Also, a lot of them are bailed out by the government, so they can do whatever, they can make a lot of weird choices. But you got to think of, there's some people out there that make their living lending their money. So yes, they have money, but they also have the fear of like, if I don't lend it out, then I don't make any money. So like, I think that we'll lose some private lenders, and we'll lose a little bit of like how many there actually was. The thing was, though, is what I would say is like 3 weeks ago, there was like 1,000 lenders to us needing 10 to choose from, and there was like 1,000. So
Yeah.
that might go down to 600, you know what I mean? But we're still going to have like 500 more lenders than we need, because like this market has been saturated with lenders, which was driving the prices down and making it kind of cheap and insane. And I knew that couldn't go on forever because they were almost matching bank prices and stuff. With that being said, though, those lenders likely are getting cheaper rates themselves, right? Because a lot of them are lending off equity lines, a lot of them are lending. So, reality is they can't, where are they going to put their money? They can't put their money in the bank. They can't put it in, they can't put it in CDs right now. They can't put it in the bank, because when they lower the interest rates like that, it means they can't actually invest it in anything institutional. They'll get no return. It'd be like 0.25% return right now, or 0.5%. It'll be getting like check account money. They'll be getting like, I just put it in my savings account, getting 1/8%. So they got to do stuff like this, right? If they want that money to actually earn and let them pay their bills, they're going to need to get it out. So greed will get people lending again, and I don't ever foresee a complete shutdown. I just see there's going to be some dudes, women's, whoever lend money, that are just going to not have the emotional fortitude to do this right now. Totally cool, by the way. We'll be fine, especially you, because you have good track record. You also aren't looking for like 100% rehab and purchase financing, which that might take a little bit of hit. So what I do foresee seeing happening is what they were just starting to open up, like 100 to 100, like 100% of purchase, 100% of rehab. Probably going to go away from that. I'll see them probably like take a little shy away from that, but
Yeah.
I don't see them going insane. They'll probably just want you to be like, we'll do rehab and purchase, put 10% down, or maybe they'll do even 20% down or 10 down. You'll need some more money potentially to get a deal done. That's fine though. We'll just have to make more of the deals we do. That might just stop me from trying to do 10 or 12 at a time, get me doing 8 at a time. That's all. I'll just that's the adjustment I would make. You might, instead of doing 7 at a time, maybe you do 6 at a time. But if you got a lot of private money, it might not affect you at all. But financially, it might affect me. But I don't really worry about that, because often I found if I'm doing 12 at a time, I make the same money if I'm doing 8 at a time. Like legitimately, because 12 at a time for me is too many. 8 at a time is that perfect balance. If I went down to 7 at a time, I'd probably make the same money as 8 at a time, because it's really about like the less deals you have, the more you make of the deals you have. Right? There's so many things I could be doing in my deals. I've actually decided that I'm going to cut my coaching down to 3 days a week, which I don't know why I was doing it any more than that anyhow. And then just do my rehab business the other 2, Thursday and Fridays. So kind of was already doing it that way. This just kind of more formal, me saying like, all right, I need to get real focused on the business 2 days a week, kind of getting out there and doing whatever, helping out, like just driving. Remember, we were talking about this with Michael Chow earlier. Like, it's time to get out and drive the business and push it forward, and make magic and just bring that value that we all have the ability to bring. I think there's a lot of people that are going to be hurting right now. I don't think it's us, by the way, because like I said, I think I told you this on one of our calls recently that like privately, I've been coaching you for this time. I just haven't been telling people because I didn't want to sound like a lunatic. And, I didn't want to preach. I don't like to preach fear. But we knew this was going to come at some level. And I don't think this is the recession we were thinking. This is probably a more short-term kind of economic recession. It might even be called, needs to be 6 months for it to even be a recession. So it might not even turn into that. It might just turn like a blip into the market, but there will be a recession in the future. So this could actually be really good for us, because whenever stuff like this happens, it creates a high level of clarity around like the things we're being loose about, the things we know we should be doing, but we're not doing. Like all those things get more clear in times like this, right? They get way more clear. So 2008 made me a strong person. I'm so glad for it. I didn't go bankrupt, but I felt a little bit of pain and nervousness, and had to pivot from doing hardwood floors to this, right? Because that business was starting to struggle in that time, and then house flipping, luckily, was just kind of being my new thing I was working on. So, you know, and then, so money's always been there. Even in 2009, there was many, many people who would lend. But did I have to get on the phone and talk to 2 or 3 people and, you know, find one person who would lend? There's always going to be somebody lending. You just got to reach out and communicate and ask people, get on your, if you have any like local discussion boards, anything, you go online and ask people. Like when you go online, there's gonna be 100 lenders that come up, bigger pockets, you know, asking if there's anyone lending in that area. So just look for that. I don't know if the connected investors might work. I've never really tested it. I know what you're talking about, getting the lender list. It might work. I'm not sure. It might, because it probably will work, because likely what I thought, I mean, it's probably not as, so what I think is probably fake about it is it makes it sound like it's a bunch of private investors. What people have told me about it, and I feel like it might have been Shauna who had it, because she was with Connected Investors. I think somebody told me it's mostly like hard money lenders acting like private investors.
That's what there was a little thread on it on Bigger Pockets, and a couple of people said that when you put your information in, all they do is drop you into this like Shark Tank of like hard money lenders that hawk you, and now they have your email, and that you just like, yeah, that's what they said was what it did. It's not like actually like Michael Green that has $1 million to loan at 12%.
Exactly.
So that was my fear.
Well, use a different email, but kind of you want to be talking to those people right now, right? You want to be talking to, you want as many lenders so you can just get on the phone and start talking with people.
Yeah, I was going to use Mickey G flipping.
Don't use that. Tanya at the Flip Factor is the right one. Yes. He's going into, he's putting his name into this thing that'll get him to like thousands of hard money lenders. Essentially, like, what is it called? Lending Tree? I did Lending Tree. Don't ever do that. Lending Tree is insane, dude. You have to get straining orders. They call you and they're like, come on, man. So you mean you didn't get the loan? Is the loan closed yet? Holy shit. They must, like,
I might put something on Facebook too. We actually got 2 of our private lenders off of Facebook, believe it or not.
Yeah, I think this is a good time.
They're on there all the time. So if you can, I don't know, and this is where I'd be interested. Like, I know that you work with the one guy that's doing the copywriting stuff. Mm-hmm. I'd love to see like if he's got like a blip of verbiage that would like, because people scroll so mindlessly, and I find like myself, I'm like, I'll usually stop for a picture, or I'll usually stop for something that might be like a fact, like a number that I can quantify. So I'm trying to figure out like what that might be as well, because I know there's so many people that have private money that's just sitting there.
Well, I can tell you all the answers to that with my copywriting guy. I've studied it with him, and it's what we do with all of our students when we're doing it, because it's called, when people are scrolling, you got to get attention grabbing, right? So I can tell you that like on Facebook, what grabs the most attention is a video over a picture. So remember, the first thing they really see is the picture or the video. But if it's video, there's movement, you're talking, and you're moving in that video, like you're taking a walk or you're doing something, always going to get way more attention than if you're like sitting behind a desk saying, hi, I'm Ray, and I like to do X, Y, Z. That works pretty well, by the way. That's better than doing a picture, but not as good as like.
So what if we did a video on one of the properties to kind of like.
Sure. Yeah. It's like, hey, well, what would be a great video, honestly, would be like, hey, I know we're in a recession, and right now, and I just want to give a big thanks to my lenders, because some lenders are backing out right now, but ours are really holding strong. And I just want to show you guys what really just happened recently. Like, we just put a property on the market, and we got multiple offers on it. Like, and we're under contract for over a list, and you don't have to be exact because you probably won't put them out there. And we got a strong buyer. It's going to settle in 3 weeks. So a lot of people think the market's crashing, and, but like really right now, things are amazing for the real estate market. The interest rates are super low. People still need to live in homes.
You can make a joke about it. For the right product, people pay a premium. Look at toilet paper right now.
Exactly. Right. I mean, for the right product, people are still buying it, and people will pay a premium for it. And like, people actually being in a home right now might be more important than ever, because being in a home right now is where a lot of people are spending time. Like, this is a great time to buy a home and like live in a great house, because we're not out doing things as much. So we're actually seeing the market, and this is not just here in New Jersey. We're seeing it across the country. Things are still getting multiple offers. The market's much stronger than ever. And I know it's really hard to believe, because, out there right now, the news is really pumping a lot of fear and doing a lot of stuff. And, but right now we're going to survive this, because interest rates being low is what drives the real estate economy, and it's great right now. So if you
that's a good idea for a video. Now, what about verbiage though? Like, I know there's just a video, or do certain like catchphrases like work too? Because I know they speak to that sometimes, or just a video.
So you do a video and then a little bit of copy, right? So the copy might be just a sentence or two, just like, check out, or just be like update on the real estate market would be great copy. Like update on the current real estate market, you know, but don't put coronavirus in it. The current real estate market, you know, what's going on in the current real estate market, something like that. That's all you
Okay.
need. They'll listen to the video, and then you might add in there, hey, if you'd like to partner with me, what I might say is if you'd like to partner up with me on deals in the future, we've got a lot of really big opportunity happening right now, or you got to be careful with that. But you can say big opportunity, stuff like that. You can
You
actually
just
say a
actually
lot.
can't talk like rates and stuff.
You can't talk rates and stuff. So, and that's why I say partner. Just, and you can say partner might be, hey, the partnership is you lend the money and I give you X percentage. Right.
Okay.
So you can do it like that. I mean, really, the best thing to do is to take any deal you've done too. Like if you've done a deal and take that deal and do a case study on video. So just walk through the deal and be like, hey, we bought it for this, we sold it for that. It's under contract now, you know, just, you know, for well over list price. And then, but we really want to give a big thanks to our private lenders who are going to make X, Y, Z on this. So whatever you're paying in interest, you know, that lending home, right? In total, what you're paying the lending home and your private lender, add that up. Be like, private lenders are going to make $12,000 on this deal. And we're happy to pay it because they're a really big part of our business and we really appreciate it. We just wanted to give you a big thanks. Bam,
Yeah.
shoot it up. And at the bottom, you could say, you know, things are really great right now, despite what a lot of people say. If you'd like to be a private lender or you'd like to, you know, work with us or partner with us on our next deal that's coming up soon, you know, send me a message. That's it. So what you're doing is you're just thanking your private lenders. And I kind of lump in my hard money lenders if I was doing it. Just, and, you know, I call them all private lenders. And you just, whatever they're making, just be like, hey, my private lenders made, you know, $12,852 on the last one, which is true.
Yeah, that's a good. I'm gonna do that tomorrow. So I might do one tomorrow and then do one on the house that we're getting ready to list, and maybe I'll kind of do one like once a month so that, or not once a month, like once like every week or so.
Yep.
Because I think that's probably where there's a lot of money. Because right, most people that are probably on the Facebook probably already know what you do, and if it's people that are close enough that would consider investing and that even had the money, I feel like this is definitely intriguing to most people what we do.
Yeah, for sure. Right. They don't know. I mean, looking from the outside in, everyone think that the real estate's like economy is crashing.
Yeah,
Right. They don't know. I mean, my hard money lender thinks it. You'd think he would know. Right. But I don't know. I was like, hey, are people defaulting on you, or are you hearing from all the people? He's lending $7 million. I'm like, dude, you're lending $7 million. Like, are people's homes, are your clients' homes not selling? No, but I'm sure they will be. I'm like, okay, well, they're not doing it yet. What's the problem? I'm like, they haven't reported any kind of problems
yeah,
outside of the normal problems they probably already have when you lent to a goofball borrower. But that's like stuff that you can't do. You know, that was going to happen regardless of Corona. That was probably just, you know, Corona becomes a great excuse for them. You know,
yeah,
they're probably not going to make it either way. So, I mean, ultimately, there's plenty of people to borrow, but part of the shift might be that we got to go find the money, right? And then that's not a problem. There's money out there. And I pay people whatever I got to pay them. I just go find enough people. It's like anything we do. If we find enough people and we talk to 10 guys and, you know, and say how much it's going to be, I just pick the person who I trust can get me to settlement the fastest and has the fairest rates. Sometimes they're not one and the same. Sometimes it's the person I trust the most or slightly higher than it, but never are they going to be the highest. But, you know, I'm not always going to go with like the lending home who was cheaper than my guy, but I knew they were going to be weird when stuff like this happens. And in general, they're weird, right? They're always changing. They're always flip-flopping. They're changing. They're adding things. They just, you know, they don't have any consistency. And I
yeah.
think long-term relationships are what I really love in this business. Like I've been working with my hard money lender for 10 years now. One of them
Okay.
about 5 or 6 years with the other one.
Okay.
So that's why I pay him more, because you know what? He normally, any situation, he'll lend. And honestly, I think if I got a deal now, even the one who's freaking out, I got a deal now, I might be able to call him up and be like, dude, I know you're afraid right now, but like, it's me, you know, that I got money to put in, like, you know, like I don't want to miss an opportunity to get these deals. And right. And cause I think that as soon as people start going back to work and everything, and we start looking like it's heading in a new direction, people emotionally will start to, let loose a little.
Yeah, that's what the
We
president said by Easter.
Yeah,
So
we've been right now, we've been in a complete unknown and just completely locked down. This stuff feels scary. And I think they're doing all the right things. I'm not against anything they've done, but a lot of fear has been pushed. I mean, I read an article today and it pissed me off, honestly. And then it made me go on a whole thing. And that's part of what I'll talk about in tomorrow's event. I went through an article today was saying real estate crash looms due to COVID-19. Right. And I'm like, well, that's what's the basis of that? So I start reading it, and I read it, and it just basically says, well, based on what we got going on, there's likely going to be a crash. But then it provides no proof of why that would be the case. It provides no proof of where we are, right? What's going on right now. It says nothing other than, well, people are losing their jobs. So, well, that means the market must crash.
Yeah.
Like, no duh, but if people are going back to work soon, that's not going to, you think they're like, everyone's going to be in there. They're making, like, first of all, they're pumping money into the economy, right? They're pumping money into the economy. They're making you where you can't evict people. Like, everyone's doing like forgiving like the mortgage for a month or something. Like, if you didn't work for the last month, you probably easily can call your company and get that month taken off. Like, I mean, everyone's doing that right now. I mean, you know, you can call up everywhere and just like, I'm not paying anymore. You know, if you're out of work, you know, you're in any of these industries that are struggling. So like the reality is, what's the net outcome? People go back to work, they'll be all good. They'll be forgiven for the time we had down. And, you know, we go back to business as usual eventually. But the thing is, they're pumping this stuff out, and this lady pumps out this whole article with no proof, no anything. And I read who she is, and this is her credit, right? I mean, her credit, like her, you know, here's what she says. Her specialized. She used to work at Blockbuster or something, right? She's like a video specialist, and I worked at Blockbuster. And back in the day, she also she's a writer, and she's also says she does what kind of yoga does she said she did? Cosmic yoga. She does nothing about being in business, real estate, anything, economy. She's an editor for LinkedIn. That's who she is. This is who we're talking about, who's writing an article on the market crashing. Like, and then I go and I read 7 more articles, like breeze through them, and not one of the fucking articles are actually written by anyone who's actually in real estate. Yet Lending Home was on the list. They wrote one. Like, okay, great. They know everything about real estate. They know nothing. They just lend money. They probably paid somebody $100 to write that for them, honestly. Right? They probably just went on Upwork and hired someone to write those articles for them. They're just lead magnets, but they're coming up. It took me 10 articles to get the Bigger Pockets, which Bigger Pockets is one of the worst places you can hear. But let me just tell you who's worse than Bigger Pockets is anyone who's not actually in real estate is actually worse than Bigger Pockets. Dave Ramsey. You know, I love Dave Ramsey, right? But he's not the guy to get advice, because Dave Ramsey didn't write the article on house flipping. Like I said, somebody on his team wrote it. It ain't him who wrote this about house flipping. They're just writing stuff, and they're using it to generate people in and then, you know, and sell products to them. But they don't know anything about real estate. So right now, unless you're willing to, it took me 11 articles to get the Bigger Pockets. And I didn't see until 15 or 16 articles, I didn't see actual people like me, right? Because I can't beat Lending Home. Lending Home has a lot more, you know, they're using this as spending a lot of money on this stuff, right? Probably spending $100,000 a month or something on marketing. So, yeah, so that's what you got to go through to get real information. You got to go through an editor for LinkedIn who does cosmic yoga. Okay. That lady is definitely who I want to like base my business decisions on. Not one thing she said made any sense, and honestly, she didn't even put any proof points behind anything. And Bigger Pockets is known for giving really bad advice also, because again, they're just like they're just like a lot of newbie stuff in there, and they talk about a lot of really dumb stuff, but they're better than her. I mean, they crush her. They crush Lending Home. They crush Investopedia. Like, you know what I mean? Investopedia is not actually someone you get flipping advice from. So the issue right now is like, if you're trying to get like certainty and you're trying to get other people to back you up, you got to get around the right people. And, you know, because right now, if you're out there just in the general world and you're reading on the internet, it's brutal to get through the good information. It's basically made me a little insane, to tell you. I've never been so pumped up, because I'm just like, I don't know. It's making me more of a Trump fan when he talks about fake news and all that. I'm like, dude, there is nothing but fake news out there. He is completely right about that. They just basically say crazy stuff. Here's what they said on CNN when I was at CarMax yesterday, trying to get rid of my other car. They said that, oh, we got to report in a doctor and a nurse died today. Across the United States, we had 2 deaths today, and it was a doctor and a nurse. At this pace, we'll have no doctors or nurses to take care of anyone shortly. And then just dropped it. And they dropped the mic and just that's it. They left that. And I'm like, that's fucking stupid. What do you mean you'll have no doctors and nurses? Like, they were like, we will have no doctors and nurses to take care of anyone with the disease at this pace. I'm like, you just dropped that? No explanation? Didn't even follow through with it? Anything? Just dropped it and be like, that's it. I mean, I was like, that's a crazy. Does anyone else agree with me? Is that an insane statement to say there'll be no doctors or nurses?
Is it possible? Because there's nothing else to substantiate it.
I mean, can all doctors and nurses in the whole country die? Like, first of all, if every doctor and nurse in the country got it, only 1% of them would die, right? I mean,
Yeah.
right? I mean, right off the bat, if like, I don't know how many, let's say there's 100,000 of them, 1,000 of them would die. And we would have we'd have like 99,000 nurses and doctors left to treat people. If 100% of them got it, by the way, which is pretty unlikely that 100% would get it. But you see how they say stuff like that and they just drop it. And I'm actually hearing it. And at first I was like, holy crap, that's true. Like, they are in a bad spot. And then I think about it and I'm like, and then there's people next to me like, it's so bad. It's so bad. And I'm sitting there thinking, why are you guys sitting 4 feet from me then? Like, you know what I mean? It's so bad. Why are you out here? Why aren't you in your house hiding in the closet? But, it's not that bad that you think it's so bad. You're sitting out here at CarMax, like randomly buying a car. Like, but then I'm like, why are you guys here? And I'm thinking like, man, this stuff. And this was CNN. So then I got to go home and listen to Fox and listen to other stuff. And they're just like talking differently. They're on there talking about like, look, if this is coming, we got like, they're having great success with the malaria drug right now. Really good. Like there's people on YouTube talking about I was sick and I took it and I felt really a lot better very quickly. And it's really great. And like Star from Hawaii 5-0 was on there. I was watching that last night. What is he? The Asian guy on Hawaii 5-0, the new Hawaii 5-0. Like,
Okay.
Yeah, he's like the Asian dude on the new one. He's like a karate artist. And so he was on there talking about he had it and he was like really bad off and he started taking the drug and he's like, dude, 2 days I was better. Like, so it's pretty cool. So you're hearing a lot of like positivity from like, but you got to go find it in the little corners because unfortunately there's like too much going on overall. And, you got CNN and other news people just saying shit like real crazy stuff. Like if, the market could crash, it could be that no one could sell a house again. Like that's what people were saying to me. Like I was like, well, you realize in the worst crash of 100 years, we were still selling many, many homes.
Yeah.
Right? Less than before, but more than enough to make a great living. Right. I mean, for, like Nancy and Gerhard, you guys ain't got to worry about. You guys got like one flip going on. Right. You don't have to have 700 flips going on. If you had 700 flips going on, this could be very impactful to you. But one flip, you still have the ability to kind of crush this and bring it home and cut cost and, and keep things tight and sell your house. I mean, you just do. Market, the interest rates is really low. So, making the interest rates this low due to Corona, they actually lowered the interest rates even more, which will actually make the values of homes go up, right? You guys understand that if they lower the interest rate, the value of a home goes up. People don't buy based on price, they buy based on payment. And now they can pay less and buy more. So, whatever, we probably will feel a little downturn, but it probably got offset by the fact that interest rates are going to be insane. And I ain't seen they have to shut down where we are and where you are too. And I read into that a lot. And basically the laws are here. Realtors are still showing houses. I just put a house on today for a friend in PG County. And I put it on at 10 o'clock and I had a showing. They were coming at 10:30, a half hour. I already got 6 showings today already and a lockdown. So I don't think a lot of people were listening.
Everything's. But now I get a quick question because I know Gerhard and Nancy are on too, and I want you to chat with them. Did you ever check by any chance on that for that insurance, how you have it set up? Because that's one thing that I've had it, but then so I talked to a few people yesterday and they're like, well, if all your guys are insured, they're like, why do you carry a GL policy as well? And I was kind of thinking,
you can carry one, but the general liability I carry right now, and I don't know if this is different where you are or what maybe you got to talk about lower rates, but I checked and seen I have it on 2 companies. On MP Green Management, I pay $1,182 for the year, and on Restore House, which is another company, I don't know why I have it on that, but I have to have it to have my home improvement license. So It was $863 on that.
do you mind texting me your insurance guys info? Because I don't know if maybe I'm getting bad information, but I've been in like the mid 3s and they're saying it's based off of gross sales. And I'm like, gross sales. I'm like, my gross sales. I'm like, I sell 8 houses a year. Like, how am I getting charged insurance premiums on the sale of the house?
That's why you're getting screwed then, because you just tell me gross sales are XYZ. Gross sales are not ever going to be based on the house sale, right? Because that's insane. Otherwise, I have $50 million a year in gross sales. I don't know. I should be wearing a suit based on that because I have $50 million a year in gross sales. Like, it's insane to base it on gross sales. I'm
just curious how your guy, because I know there's different markets that they can run it through.
Uh-huh.
I'm just wondering if your guy maybe is more, if he has a better carrier for it, or
I'm thinking that it probably comes down to them charging you what they think they can charge you for. And it sounds like if they're charging you on gross sales is probably why you're paying too much.
well, he
Because like,
took it
yeah.
down. He said he switched it. Now he switched it where he's charging on my subcontracted cost. It was like 120,000. And that was cheap. That was like $800 a year. But he says then they have to charge you for a minimum of 20,000 of payroll. And that was like $2,700 for $20,000 in payroll for me
Oh,
and Hannah.
so that sounds like though, okay, so $20,000 in payrolls, but it sounds like he's charging you 10% on that then.
Yeah.
So is that 10% usually workman's comp? Is he charging you guys workman comp? Is that actually what you're doing?
Well, no, that's not his workman. This is strictly a GL policy.
General liability.
It's a commercial GL policy. I literally have it right here in front of me, and it's for $1 million, $2 million, and for me and Hannah, for contractors, executive supervisors.
What does it cover? What is it
We've
for?
never used it for general liability. If we
So
hang
we've
a
had a
cap,
lot, we've had a lot of this before. You're going to need to go and search and talk to someone who knows how to work the system a little bit. And I don't know if my guy works in New Jersey or even is legal to work in New Jersey because he's from Maryland. So he's not like a nationwide insurance company.
yeah, because like for the subcontractor stuff, for doing that, for $120,000 of subcontracted costs, it's $740. And I'm like, that makes sense, but I just don't understand how $20,000 of payroll exposure for me and Hannah, who don't do any work on site, like we're not. That's
Yeah.
$2,643 for $23,000 of office payroll
And
exposure.
why can't you guys opt out as the owners, right? I mean, usually the owners can opt out of that. Like, why would you even need that insurance?
They're saying that's how this company writes it. They either write it on gross sales or he found this other carrier.
Yeah.
But I'm almost tempted to just like cancel it.
So, I mean, I wouldn't want it. I mean, I don't even know what you need it for or what the purpose of it is. I mean, I'm writing right now. The main reason I have, let me put them on mute real quick. The main reason that I have the general liability is because for the business, I have general liability because
Well, you have your contractor's license.
I have to have it for that. Exactly.
Yeah, so I don't even, we use all licensed guys and I have certs from all of them.
Yeah.
But they're saying like, God forbid a cabinet falls and they come after you because your LLC owned the property, then it would trickle through and they'd go after the contractor. But they're saying it would protect our company if anything ever happened.
That's fair, but I don't get why you have to have $2,700 in insurance. That's what sounds unusual. Like, I don't, why are you, as an owner, I would never insure myself because like, you're not like, I wouldn't pay for insurance for myself because the $2,700 you're paying a year, you could put in the bank in the next 20 years, you'd be rich. Right. And you never obviously are going to call. I don't know how you're ever going to use insurance for yourself. Like, I don't even know. It sounds like it's just they're charging a bunch of money. I think you need to talk to some different brokers and do some research on it. And yes, I would just tell them you don't need to go for it right now because you don't let them corner you and be like it's due or you're not going to have anything. Okay, I'm okay not having anything for a couple of days. Then I need to shop this around. This is bullshit. Like, it sounds like bullshit to me. When I heard 3K, it sounded extremely high. I've never paid anything like that. Yeah, so I didn't know if it was New Jersey or what it was, but it sounds like the thing right now you need to drill into is like, why is it $2,700 for you guys for $20,000 a year of income? That's 10%. That's what we pay for the most risky businesses. Like, if you're working on like an oil rig or roofing is only 10%. You and Hannah are
Yeah, it
basically
even
paying
says that. It says in our classification it's just for an executive supervisor. It doesn't say for like roofing or like.
1 second. Oh, okay. Oh, crap. Oh, actually. Oh, it moved on me. So, yeah, I think you need to shop around. That's the best way to
Okay.
find out. Talk to someone and just be like, you got to get someone who can work some magic. Like the insurance company I work with now, one of my students called them and got a price, and they told him a price that was twice as high as what I paid. And they told him they had to have all these insurances. And I'm like, dude, go tell them you're paying this, then you don't need this and that. And they were like, oh, okay. But like when my student wasn't fighting back with them, they were trying to charge them like double because they want to insure you for anything. They'll tell you you need to be insured for all these things, but there's always a loophole around most things.
Okay.
So if not, you got to get a broker who is like more open to like, insuring you for what you need. Because they used to do this with my partner all the time. You come in and be like, man, our insurance is going to triple. We were so underinsured. I had to like, and I'm like, dude, let me see what you're talking about. I go back and negotiate, work with them. Next thing you know, it'd be like half of that because they were just trying, basically that's their think about it. They got to sell you insurance. That's what they do. So they want to sell you the most highest cost because they get rewarded for doing so. Even if it's not something you actually need, probably get paid even higher rips on things you don't need. Sure, they get better commission on stuff that's pretty useless.
Okay.
So,
All right.
yeah, I would shop a little and maybe do a little research. And personally, I just have general liability. I don't ever pay workman's comp. And then when my company, who I have general liability, tries to ever say, we need to audit you for that, I'm like, dude, you're not auditing me for anything. I don't have any employees, period. Because they'll try to audit you, but you don't even need to let them audit you. And I'm sure there's somewhere that'll give you that insurance that you need nationwide or something and leave you alone. So there's a lot of places that'll write it and then never follow up with you. You just got to find that little local person or maybe nation. I don't know. Someone,
Okay.
there's always someone that'll do it. So this is pretty cool for everyone else too, man. Don't insure yourself, but don't overpay for insurance because insurance long-term, I can't tell you guys. I mean, other than getting insurance on your rentals, I highly advise that. I have never had an insurance claim on a rehab ever. I've had 3 insurance claims in my life and they were on rentals. And so that's it. So I do advise getting them on rentals because I have collected about, probably close to $170,000, $80,000 from that. But that's it.
Okay.
So anyhow, that's, but I'm also kind of butthurt about all the insurances I've paid over the years and nobody does anything with them. I'm just paying them and then virtually it's just like a standard to pay it. And it's kind of a scam. Title insurance is really one of them, by the way. So, hey, hey, Micah, Nancy, and Gerhard, what's up, guys? I don't know if it's Christine that's on the phone or maybe it's Micah or somebody on the second time. Any questions I can help you guys with?
Hey, Mike. Sorry, I was on mute driving. No, I'm good. Just chiming in to get some more nuggets of wisdom.
Yeah. Stop getting billed or stop getting so Micah actually does a lot of settlement stuff. That's what he does for one of his jobs. And man, I'm trying to I'm a little bit butthurt with the whole the insurance they make you pay, like the insurance for your personal insurance when you settle a property. It's kind of crazy. I don't know. I'm upset about it because I've seen you get title insurance, like you get it for lender title insurance and you get buyer title insurance. They charge you a lot of money for it, but whenever something comes up, it's really difficult to get them to actually do anything with it. Like it really is difficult in a rehab situation to get them to do anything with it because you have to get that house back on the market in a reasonable time, and they're never going to do any of this stuff in a reasonable time. So they're just,
if there's a title issue at resale.
Yeah. So the thing that everyone, like every title company tries to sell me on to tell me why I should get title insurance. Well, listen, if you get title insurance, you could end up spending $100,000 in lawyer fees. They'll pay all that. But I'm like, well, first of all, I'll be bankrupt if I end up, but they don't tell you that, that might take 2-3 years to fight, right? Because the only way you're going to rack up $100,000 in insurance would be if the lawyer was in court backing in and out of court for 5 years, right? You're not going to be racking up that kind of money. In 5 years, where would I be in 5 years of someone trying to sue me on a rehab that I've got like a loan with Lending Home and I'm 5 years into it? So likely there would have to be some settlement of the problem that would have to happen above and beyond, and they won't do that. They'll actually litigate it for you, but they're not going to settle a problem out unless it's a mistake. And the thing is, if you've got the same thing, if you get title insurance and you get lender's insurance and all that, and you get it, the only time it makes a lot of sense is when you have a rental. Now, with that being said, I have to pay it because my lenders make me have it. But I've spent over $1 million on that, and I've spent over $1 million on builder's risk policies, and I've never collected on either. I've had 4 times in my life where I could have collected on title insurance, and I'll tell you, 3 of the 4 times they denied me and said, well, that was an error for this, an error for that. They basically have like 700 reasons they won't actually follow through with the insurance you pay for. So there's a really good chance that if you pay for the insurance, we actually think that in every scenario we would be protected, but we're not always protected. And when you are protected, they're going to do it very slowly. So unless you have the ability to own the home for 5 years or 3 years or 2 years, then it's kind of a problem. So what's happened to me all 4 times is, it was like little stupid things, and I just had to pay the people, or I had to get rid of it, right? I had to go, I couldn't wait to litigate it and have the title insurance litigated because waiting 6 months or a year for them to do that was way more expensive than just giving 5 or 6K to take care of a problem that was missed. So I'm not saying don't get it because I don't really know a way around it yet, but I'm definitely like, when it comes to insurance, I'm thinking like, don't overinsure, don't get things you're not forced to get. Because the reality of it is half the time they don't want to pay you. For flips, I guess there's not as much that goes on with flips, but the title insurance is a scam. Like Glory right now, she had a deal she bought and she just got a letter from someone saying that he's owed $240,000 and, and she can't sell the house because he's owed $247,000 or some crap. And she sent that to the title company. They're like, here, you got to mail it into XYZ. And that was it. And they're like, how long is that going to take? That could be like forever. And she's trying to put it on the market. She just finished it. She's trying to put it on the market now. It's like crazy. She's like, what's going on? This is insane. And of course, it's going to take forever. And this is why I like using good title companies right off the bat, people I like and trust, because ultimately they'll make sure that doesn't happen too often. But Micah knows a little bit about it because he's doing it. But I don't know, man. I wish there was a way around like title insurance, because I don't think even when they do back you up, I don't think they back you up anywhere near with all the money you're investing over the years of doing this. But you're more informed. You might have a better understanding of it than me.
Well, you never see it used. I mean, I've never used it myself. I got close one time and I found the same thing. It was going to take a very long time to get through the process. So fortunately, the buyer did his own research and saw that everything that we did on the front end when we bought the house was clean and clear.
Mm-hmm.
But, it was in Pittsburgh, PA, of all places, and it still showed some stuff on like an abstract report that had been cleaned. It had been cleared up.
baby.
And you end up
Sorry.
having just a trust. You end up just having to trust us. We were right, but it would have been a very long time to sort all that out. And I've never been through the whole process, even though I've been around the title business 12, 13 years, and sold a heck of a lot of it. Those fees are regulated by the state of Maryland. So each title insurance underwriter has to go and get their fees approved every year for how much title insurance is. And all of the carriers, there's probably half a dozen national carriers, maybe more. They're all pretty close. So close in premiums.
Yeah, so it's controlled. You can't even negotiate it. But my point is, you pay so much into it that, I've run numbers. I mean, if you just run it at $1,000 a flip, right? I mean, that's about what I'm spending on title insurance generally. Even if it's $800 a flip, over 1,000 flips is $800,000 in 10 years, right? So, I mean, I'm at more than $1,000 average on Builder's Risk, probably more like a $1,300, $1,400 average on that. So between the two of them, it's around $2 million I've spent, and I've not collected one penny back. So I don't know what to do about it, but I'm thinking through it. Like, I feel like there has to be a way around it, but it's so regulated. I don't know. It's something that I know, like really big landlords don't buy that insurance. Like people that own 600-700 houses, they're not paying $1,000 a year insurance on their properties. They're self-insuring because they're just like, we're not doing that.
For what? For like fires and things like that, or
no?
Title insurance, or
they're probably not paying that either unless they have choice. They would probably not pay that either. But no, ultimately what they're doing is like, think about this. If you own 600 properties and it's $1,000 a year insurance on each property, it's $6 million a year in insurance. So you think you would just put that $6 million into a bank account and just be like, if something burns up, we'll take care of it?
Yeah.
I mean, they literally can, in 1 year, they could self-insure, right? By multiples over. So they don't buy insurance.
The only negative to that is if you had multiples because of a huge, act of God type of thing. And people buy that for peace of mind. You know what I mean? Like, you're breaking it down into a very outside the box way of thinking, which is accurate. But I think like speaking for myself, I buy it, take the hit, and I'm like, okay, even if it's a false peace of mind, it's a peace of mind per se.
For sure. I mean? Totally, dude. And you know what's interesting? It's because if they were to rob you for $2 million, if they were to tell me, oh, look, I'm going to get you for $2 million over the next 10 years, I'm like, man, F you. But when they get me for $1,000 every house, it's like meaningless because it's just another little, little blip in another little line on the HUD one, right? Not a big deal. It's just another little cost. Oh, no big deal. And honestly, I don't know what to do about it because the only way it would work would be, I think if I was able to take $100,000 and put $100,000 into a bank account, I'd probably be comfortable self-insuring on my rehabs. because I've never like what 100 grand literally would be the thing burning down. I could build another house for 100 grand, you know, but I've never had a house burn to the ground, by the way. Right. I mean, even when fires happen, things don't burn solely to the ground unless you're in the woods or something. You know, they're not going to burn completely up. People come there, they fix it up. And empty rehabs don't burn up all that often or burn completely up. So even at 100 grand, your likelihood of it happening is very low. And if it does happen, would it actually be 100 grand? So the question is, though, it's like having that extra 100 grand and then the time value of money. I don't know, man. I need a way around it, honestly.
Yeah, the other negative is that people typically don't take those savings and stash them away. They spend them.
Well, that's bad, because then it's like, you know, you have to have insurance if that's the case, because if you're doing stupid stuff like that, then you're not going to have the money to fix houses when they blow up. So you got to have insurance when that's the case. And then you just take your lumps. But I'm thinking for people who actually have a little money in the bank and, you know, and I've seen people with money do this, by the way. Like I said, if you look at any of the Jewish landlords in Baltimore that own 1,500 properties, you really believe they're spending $500-600 a year on insurance on 1,500 properties? Zero chance of that. Right. They're going dead straight into an account. They've got money to cover it. There's like whatever, you know, think of that money they're saving, and money saving is just like making it. So I'm not saying for us to do this. I'm just, I guess, probably ranting, and this probably makes no sense. So if anybody has something more important to talk about, feel free to ask some questions.
Yeah, the situation that I was telling you about, that title issue in Pittsburgh, is because I did have a rental burn down. There's a really bad part of Pittsburgh, and I didn't know what I was doing. My cousin asked me to get in. It only cost us like 10 grand each. He went to one of those 3-day seminar things, and it ended up paying off because it burned down. And I thought, I didn't understand really anything that was going on, and I thought we were going to get what it was assessed at.
Mm-hmm.
And the insurance guy was like, "Are you serious?" I said, "I'm dead serious. I have no idea how this works." It was assessed at like $20,000-30,000. He goes, "You get whatever the policy limit is." So how much is that? He goes, 93 grand. And we got a check for 93 grand and another claim before that for like 8 grand because they stole copper out of the one side. So we got checks for 100 grand on a $30,000 property that wasn't really doing any good. It was luck beyond belief. And so now that's my story to counter your rant, because now I want to buy insurance on everything.
Yes, I agree with that too, but think about it like this. So if you were really looking at it at a high level, you could decide like where are properties at risk for those kind of things. Every insurance claim I've had has been in a bad neighborhood. So there you go, right off the bat. I mean, one way we could say, okay, if it's in a rough neighborhood, we're getting insurance because a good chance we're going to collect or there's going to be a big event. But one of the ways because think of like the money you'd be putting for the houses you don't insure as being your own insurance fund. Like every time you just drop that money into the insurance fund, your own insurance fund. And how would you keep it profitable? Well, the way you would keep it profitable would be by offloading, right? Offloading any of the loans that you would consider to be risky and just getting insurance for them, honestly, right? And then self-insure all the stuff that would fall under like not very likely to have any problems because you just don't have as many houses burning up outside of the hood. Like seriously, like very few things ever burn. I can't even tell you a house I've ever had an issue with outside of the hood. All those houses were in Brooklyn. And Brooklyn, all three were in Brooklyn. There you go. Brooklyn right there. I won't self-insure. Don't self-insure in Brooklyn, dude. It's over because that place is a wreck. Funny though, I think it's really not just Brooklyn, it's just bad neighborhoods in general, right? Yeah. And you kind of made that point. So yeah, okay. I mean it's a bigger problem that can't be solved right away. And there's no easy solution for it, but it's something I'm gonna keep thinking about because I am interested. And
I take it you don't buy owner's policies then, for the most part, because that's optional. But it's the lenders that make you buy that title insurance.
Well, they tried to explain to me why I need owner's policies, and it don't make any sense to buy owner policies. But I have been buying them. But maybe that's the one change I could make. Because the owner's policies, they're like, well, that'll protect you. The lender's policy only protects them. But I'm like, I really only care about the lender being paid off is all I care about.
Correct.
Like, I don't really care beyond that.
The owner policy, as you know, just protects from previous liens and judgments, things that they didn't see when they did when they sent out an abstractor. So it protects you from like that kind of stuff. And
I've never seen that come up until just recently, and I wonder how legitimate. I would think that Glory's thing is not that legitimate. because somebody's saying they owe $214,000 and that, you know, it went through foreclosure for years at the courthouse steps and then they never recorded it or anything. I don't even think they can actually make a case, right? If it wasn't recorded, then loans, you can't just pull up a loan. Like, you know, how would you, right? Don't loans have to be recorded to even be legal? Because then anyone could just write a loan and be like, hey, let's write a loan and tell and say I borrowed $200,000 against a house and they can make people pay it.
Yeah, to my knowledge, yes.
Yeah, so if it's not been recorded, then there's like it's kind of not legal. They can't, especially when it's changed hands. They can try to go after the original person, but they can't come after the new owner because the only way they can do it is if it was filed, but someone didn't find it. So I guess that's the big question when the guy's like, you owe 214, did he actually record that?
Yeah, if it's filed and they didn't find it, then the new owner is subject to the loss if they didn't buy the owner's policy.
Dude, I don't even know what to say then because, well, they did buy it. So, okay, they got owner's policy, so they'll have to deal with it.
But to your point, reality kicks in when you go to actually get the claim taken care of. It is going to take a very long time. No one's going to be in a rush to sort that out. They don't care that you're
especially the person making the claim because they know the longer they wait it out, the more likely you are to pay them off.
Yeah, and you do have to, you will have to pay them off because the new buyer is going to have a title company and a title insurance company. And the title insurance company is not going to insure until it's a clear title. In your situation, $5-6 grand, you can do that. What if it's 40-50 though? It really does stick you in a bad spot. And there's one of my buddies is an investor. He bought a property with a title issue. I don't know why he would buy it, and now he's selling it, and he has to force the buyer to use the same title company affiliated with the same title insurance company who will clear title, who will insure it because they made a mistake once. So I hope I'm not getting too complex, but
No, I get that.
It matters. It matters to a certain degree, but very unlikely will you ever get a claim like you're saying.
No.
And when you do, your point is well taken. I mean, overall, you're spending a lot of money.
I just wish I knew how often people actually had like real substantial claims because we can always talk about like the one time this dude lost $50K and they came in and took care of it. Like, I mean, obviously I know those exist, but we're talking about like thousands of houses that close every day in Maryland, just in Maryland, right? So of course,
if you want me to, I can dig in a little bit, just see if I can get underwriter stats and see what their stats are, if they even give them. I don't know.
They probably don't. You certainly are welcome to, but don't spend too much time on it. It's probably a waste of energy. I'm not going to do anything about it, so probably a waste of energy. Yeah, I'll just keep paying.
Probably.
Yeah, that's all I'm going to do.
Probably just for, like I said, you're paying for peace of mind, like just for like life insurance.
Let me ask you this question because I haven't asked you this yet. How's everything going with your business as far as like, are you still giving showings? People still looking to buy houses? Like, what's been the general feel?
Oh, it's not slowing down at all. There's still buyers and they want homes and the rates are low. So on the retail side, consumers aren't afraid.
At all.
So,
I've asked this question, I don't know, 30 times to different random people over the last, 2 weeks, and I've not heard anything but that.
No, we had a listing go up the other day, and we put it out at 214.9, and we had multiple offers and got under contract at 227. So it's nothing. There's nothing that I can see.
Yeah.
That says we need to worry about anything.
I'm keeping an eye on it daily in case it changes, but honestly, I think the thing that's happening now that's going to actually start changing back in our favor is that Trump's starting to say, look, if you guys are going to die, that's all good, but we're not going to crush the economy. He basically is starting to throw things around like if we crush the economy, there'll be more suicides and deaths from COVID-19, which there will be. It's proven that suicide rate drastically goes up in depressions and crime drastically goes up in depressions and, high unemployment, and those things cause people to die. And he's basically saying that like more people would die if we don't go back to work, for too long of an extended time, not saying go back tomorrow, but like if we try to make 2-3 months where we don't let people go back to work, there's going to be more deaths from the fallout of that choice than there would be from, this spreading, and it's going to spread either way. Honestly, I don't think we're stopping it by buying in the house because too many people, the reason it'll keep spreading anyhow is too many people are just like staying in the house and they're out doing their thing. Right. So there's just no way to stop it. I mean, there's no way to stop it. We're just slowing it down. Which is all. So anyhow, he's starting to talk that now, which means he's setting up to probably go ahead and just say, get back to work in a couple of weeks. And I think the economy probably never really, it'll just end up being, I don't know. I mean, it's going to be a change in the way we do things, no doubt. But I mean, as long as these interest rates stay low, long term, we'll have to figure out how that might affect us long term. Because always there is some kind of effect long term of these kind of things when they bail things out and pay a bunch of money for stuff. But right now, I'm getting super lean. That's what I've been doing. And I probably suggest that for anyone else on the call. If there's anything you can do to bring more money in the household. And when I say that, I'm not cutting out things that are essential to me. Like I haven't fired my coaches. I've not stopped my business from running or marketing or anything like that. But I am firing the things I didn't need. I found out that I had insurance on a Land Rover that I owed 2 years ago. And I just found out I've been paying insurance on it for 2 years. I own 2 vehicles and I had one I barely ever drove. So I sold both of them, got a cheaper vehicle. Like, you know, and I like the vehicle I got. It's a good vehicle. I'm like happy with it. I just feel like I was being a little, I was being unwise with my money, right? I wasn't definitely really, and I've been talking to you guys about doing this stuff for a long time, but Corona has helped me take that action, right? Really dig into my books. I've been spending too much money eating out, so I'm going to cut that down. So I'm just trying to cut back things that are stupid that my life honestly doesn't even change one bit by getting rid of. Like there's nothing, my life is just as good. At some level, I'd probably say I'm sleeping better at night because I've cut these things out. So that's something to think about. Like some of these things, not only would they not really be a cut, they probably subconsciously will allow you to have more confidence and sleep better at night if you do cut them. And I would get rid of any of those things right now. I just think it's a good time to do so. Great excuse. You know, Corona is a great excuse to let go of people that are kind of not doing much. So how about anyone else?
We're all locked up in the house. It's a good time to clean up our garages and our finances and take a look at everything that's being wasted, because everyone can find waste in their budget for sure.
Yeah, I went through three months of bank statements for all my companies and just looked at every charge and said, what's this? Why do I still need it? And I just cut a lot of stuff that was completely unnecessary. And I did that because, I've been wanting to do it, but again, this was just a great time to do it. And I would suggest that you do the same, because there's probably things you're spending money on you don't even remember. And when you get really lean like that, it's just a smart way to run your business in general. I forget, being in a pandemic, we need to do this anyhow. Like this actually is now going to be my practice going forward every month, to look at bank statements every month and really, really audit what I'm spending, how I'm spending it, and really get to a budget and start living on that budget and stop buying things. Like, if I want to buy something in the future, I got to look and say, do I have the money in the budget for it? The answer is no, then it's going to be a no. And that's cool. I don't mind living that way, because what I'll get in return is a high level of wealth over the next 10 years that I didn't create over the last 10 years. And that's important to me now, because I've spent all my money learning and, giving back and traveling and do fun stuff. But now it's time for me to build wealth and build that wealth through just not wasting money. If I literally looked at, I found about 10 grand a month that I'm like literally a small change in my lifestyle. I could bring in 10 grand more a month between saving or making, right? Between the two. And it's a lot of money, 10 grand a month. It's about what I live on. So literally I can cut on, I'm probably what I was living on, but a lot of my expenses are business expenses that are stupid too. So it doesn't matter if my business makes more money or I make more money. It's all pluses, right? It's all things that aren't coming out my overall net worth, which is important. So I made all those decisions. And when I was there, I was at CarMax and I found this really awesome Range Rover I could have gotten for $42K. And I was like, that's really cheap. And it was amazing. And I was like, I can't buy this car. Like that's just not me. Not the new Dave Ramsey approved Mike Green. Not doing that. It's a nice car, but it'd been hard to preach to you guys talking about cutting costs and running around in a Range Rover. So I'm not doing that. I feel like, it's and maybe I'll get it in a couple of years or something, but right now it's wealth building time. And Corona has put the fire under my butt to take some massive action. I'm really happy about it. So that's some of the benefits of what's happening right now. How about anyone else? How's everyone's flips going? I know Darshan, you had an issue where you said you got like some kind of vacant house thing.
Yeah, it was just I found out when I brought the house, it was declared vacant, so I had to get a an occupancy permit.
Mhm.
So I'm just trying to work through that right now.
Okay. Yeah, I mean, the best thing you can do is like try to finish it and get your staging in it, and then try to do it then. Right? I mean, that's unfortunately that's kind of what you have to do because the more it's like looks finished, because you're too far along now, right? So
Yeah.
unfortunately, you're gonna have to kind of hope that they don't kick super hardcore on you. So when we talked about like Ray first was on, when he was talking about the insurance. Like, here's what's a good lesson from all this. Like, when people something doesn't feel right, then know that you just need to debate with people, keep asking questions, keep challenging them to get creative, and you'll get what you want more often than not, or some version of what you want. So, like, if Ray wants to get his insurance down to $1,000 a year versus $3, he just needs to call enough mortgage people. I mean, enough insurance people until he finds someone who could creatively write his insurance and protect him. Right? He can definitely do that. And that's what I've done. That's why I don't pay as much. Same thing with hard money lenders. If you look for money right now, right, not every lender is going to lend, but right, you just call enough and talk to them, and problem solve with them. So the reason I tell you this story, Darshan, is because like when you're dealing with these inspectors, they might come out and be like, Darshan says no. You gotta be like, hey man, look, we're in a spot. I know, we didn't realize this. We had a contractor. I thought this was happening. Right? You just make some excuses. Just say, look, is there anything we can do? Right? I mean, anything we can do at all is another scenario. So the more you keep asking them and bugging them, the more they get solution based and start offering you alternatives. So I actually got, it says, oh God, Ray's like, I'm already on it. And I get Ray, come on, Ray. You're like, Ray basically just said, I already got the insurance policy for 900 that I was paying 23,000 for or whatever. He's online doing it right now, which is hilarious. But anyhow, you can see when you actually know just to go do it is the key. So Darshan, when one guy tells you one thing, then what you'll want to do is not in the nicest way, just keep asking them. And so I found that like, I learned this from like 9-year-old Tanya's son, Ethan. If he wants something, he'll ask me and I'll say no. And then he asks me again, like 5 minutes later in a different way. And I say no. And eventually he'll be like, well, what about this? And I'll say, well, maybe. And he keeps asking me. And next thing you know, somehow he's gotten that thing that he wanted, but he just kept asking me different times, different ways until I found a middle ground. Maybe he's like, instead of this, I'll give you half of this, right? Or I'll do this instead. Or how about that instead? It's like they just keep asking. And that's what you have to do, right? You can't just take everything everyone says as face value. You have to say, okay, cool. That's where they are right now, but let me ask in a different way. Let me keep coming at it. Let me keep trying until they will often say, like, so we had this recently, Darshan, I want a house. And I'm saying recently, I'm talking like a couple months ago. So very recently, right? Within like probably late 19, early 2020. And the guy was like, it's vacant. And we didn't even know. The same thing happened to us. And they like sent us something like at the end when we were all done. He came in and he's like, look, all this stuff behind, we don't know if it's been done legally. And eventually he said, look, after I called him, my uncle called him, we talked to him 3 different times. He says, look, the only thing we can do is you can get someone to certify that the work's been done correct. Structural engineer or someone can certify the work's been done correct. And I can take that and I'll let it all slide. And you just do it. But he did say, here, you got to fix these things, right? But he didn't make me fix everything behind the walls and tear all the walls out. So the other things are not a problem, but I didn't mind fixing those, but I didn't want to tear all the walls out. So he's like, you'll have to get someone to certify the work's been done correctly. I can hook you up with that person. I'll talk to my guy. And there was a guy who did that for us and he charged us, I don't know, $300 or $500. I'll have to find out what it was. But you can always, if they're, as you're talking with them, Darshan, if they're like, you got to rip all the walls out, then just be like, but dude, can I get someone to certify the work's been done right? Because obviously I'll rip all the walls out. So often they are pretty lenient. They don't really want to make you rip the walls out. They might tell you that, but then if you keep challenging them, they often will kind of, give you another solution, which is awesome. So it's important that you don't just take whatever they say for face value and you just keep challenging it until you get the answer you want, which is a lesson from Mike Green, because I tend to do that naturally too. I did that as a kid to my mom, which I think my mom, basically, I drove her insane as a kid because she's like, you wouldn't stop asking, you just bugged me. And I guess that is a good trait to have in house flipping. And if you don't feel like you naturally have that trait, then just start learning it and knowing that it's possible and you'll just do it, right? You don't have to be born with it. You can just know that's what has to be done. Keep challenging everything. And if you do, you often will get a version of what you want, right? It doesn't, maybe like for us, we had to fix some things, but we didn't have to rip everything apart, which was enough, right? We were happy with that as being the version of what we want. So Darshan, what is your first steps? You said you're working on it. Have you actually got like a permit pulled or like, what have you done so far?
Yeah, working on getting the permit pulled now.
And what are they going to put on the permit? Who did you talk to? Like, as far as like, what would they put on the permit?
Just, that the property's occupied.
Oh, okay.
It's not vacant.
So they're just going to pull a permit and say that it's occupied?
Yeah.
Hmm.
And then inspector will have to come in and then sign off on everything.
Dude, that's what you do then. So are you going to like stage it and everything when the inspector comes in? Like, you could be like on the couch in your socks, just laying there watching Netflix on your computer, like you're living there.
Yeah, I'm gonna try my best to make it look like I'm staying there.
Throw some underwear on the floor, you know what I mean? Stage it up, like later, like, what's up, man? Dude, I'm telling you, like, you got to go far with this stuff. I mean, because the last thing you need is them coming in and like making your life a living hell. So one thing I will tell you, that they are very, very lenient on homeowners versus flippers. The homeowners like, oh, I own the house and I don't know what's, I kind of bought it this way and I didn't know. Like, you can tell them, like, if he asks, like, are you flipping the house? Just be like straight up, like, no, dude, this is my house. I'm fix it. I was just, this is the way I got it. And then I'm buying it. Like, you do whatever, right? They ask, just make it look like it's your home, right? Because you're not buying it to resell it. Doesn't really matter. They won't pay attention after that point. Just because you got to get away from that whole thing. And it's crazy too, because you got all the way through this thing without getting caught, and then that came up. Maybe that's something worth checking in the future if it's on that vacant list. I mean, I guess I probably should start checking that, because we've only had it happen one time in a long time, though. So I guess it's happened to you, though. So it's starting to feel like a pattern. But maybe it's not really a pattern, to be honest.
Gotcha.
So, all right. Well, dude, let me know if you need anything as you're going through it, okay? As you're, if there's any advice, any tips you need. Let me ask Gerhard, can you hear me?
Can you hear me?
Yeah, I can hear you. Hey, how are you doing with a lender?
My lender is okay. Actually, I haven't heard back from them because they cannot do any closings now for the next 2 weeks, I guess, until this lock is done. Because in PA, you have to sign the papers. You cannot do a virtual closing. But my lender guy was good. He was, as far I heard. I ran into an issue on my property where there was a lien popped up for taxes. That was the kid that lived with the dad. They had the same name.
Oh, okay. That's good.
Sorted that away, but I'm not closing yet on the property. I'm like still looking to see. I have a mind of, I don't know, I should figure for the next 2 weeks. Maybe I should just try and wholesale it. And if nothing happens, then I'll buy it.
It's up to you. I mean, if you get a good number, I wouldn't wholesale it for 5 or 10K though.
No, I've been thinking deal. Like 20, at least 20.
20's worth doing it. I mean, anytime you get 20, that's basically similar outcome to rehabbing.
Yes.
Because you don't, without the work and the risk, but if you can get that done, yeah, give it a shot, man. There's never a hurt. Just don't hurt your deal. Don't like market it in a way where it might actually mess your deal up or something.
Yeah, I wouldn't stick it on the MLS that it's got multiple stuff like like it shows up on the MLS like for a month before and things like that.
Yeah, because sometimes like when you want the deal, it's like you want to be careful of marketing in a way where they might come back to them, and now maybe all of a sudden they're not like very generous about the things you might need from them, and they're not flexible because they think you're trying to like work the system or something. So that's all. I mean, I would be careful around that, just since you like the deal and it is a deal. And I wouldn't definitely not sell it for under 20, just because in general, like 10K, you would just be leaving money on the table. And honestly, I would probably not wholesale it at all unless you did get a sick number for it, because the only time that I wholesale is when I have an abundance of deals. If I have no deals, then I pull every penny out of every deal. Because like, think about it like this, you don't have like tons of deals just dropping on your doorsteps. So it probably, your best bet would be to take every deal and make every dollar out of it. So even if you just did 3 deals a year and you're able to pull 35, 40K out of each deal, now you're talking like over 100K a year in income just doing that one thing part-time. It's really great for building your IRA, your net worth, and just in general, right? Just adding extra income like that. But if you start doing anything where you just sell it off quick just to get rid of it, you don't really have the volume to do this here. So if you hear that advice from a lot of people, know that that advice comes from people who have too many deals. Like, I'll sell a deal and make 5K because I got too many, and I can get them all day long. If I put an hour of attention to trying to get a deal, I'll have a deal. And so for me, making 5K and getting the back end listing is more than enough to do that because of how easy it was. If it was as difficult for me to get deals as it is for where you are, because you don't have as big of a market, I would just, every house, I would just pour everything into it, squeeze every dollar out of it, and just make it, make it the best thing ever. And then try to pull as much money out as possible, because there's inventory shortage. So you don't want to just fluff off inventory when it's that hard to get. So, I mean, I probably would not wholesale it just based on what I just said. But if someone gives you a dumb number, then obviously it's worth talking about.
Yeah. I mean, I was just worried that, 4 months from now, having a property that's a higher than the first home buyer range,
Mm-hmm.
That you're going to end up sitting with it a little bit, that we have to go down. I did renegotiate the pre-corona, renegotiated another 10 grand down from the seller.
Oh,
So,
just based on, and that was just for,
I went back to them because I wasn't that, and I was good with the numbers, but I was still, I was working on like a 30,000 profit, and I was like, man, I need a little bit more skin in there. So I got them down another 10, and I feel if I just are really tight on the numbers, I can hopefully make like 50 on it, or 40 at least.
If you got another 10K off, I would not sell it. I mean, I think, again, you certainly, like, if you went and got 10K off and in some way they found out you were wholesaling it, they're going to blow this deal up because you went back to them and got a discount and then sold it off to someone else. They'd be pissed. Personally, I probably wouldn't wholesale it. I'm not worried about 4 months from now. Seriously, you're not selling $1 million property. It's not like you're selling a luxury home. When markets start to really be affected by any kind of change in economy is when you're talking about secondary, like, luxury homes, like an Ocean City property, or maybe, where you're at, where what is it? Bethany Beach. I mean, those
Dewey.
things. Yeah, Dewey, right? I know you're down there somewhere, but Dewey Beach, those things are a little optional, right? You don't have to go buy a second house down the beach right now, and most people probably won't. Those things definitely will take a hit, not temporarily at least, and so you wouldn't want to try to sell off your Dewey Beach house right now. It'd probably be bad timing. Anything that's optional right now is bad timing. But when you think about a house, it's still like yours was like 300,000 or 350, right? When it's somewhere in that ballpark.
Yeah, 370. Yeah.
Yeah, I mean, it's definitely a little on the higher end, but it's not like, we're not talking like over the top luxury home though. And you got a lot of house for that price too. So it's like, you're not necessarily trying to sell like a little crapper for that. You've got a lot of house, like 2,000 square foot, newer home. You got a lot of good stuff going on. So yeah, I mean, see what you can do. If you can quietly get 20, 25 grand or whatever, then do it. And if not, I would not worry about buying the deal. And I wouldn't let the fear of this whole thing stop you from following through with your first deal that took you a lot of hard work to get. And then it's a really good first deal, by the way. The thing that most people don't realize is they look and worry about selling it. What I can tell you conclusively, and no market has ever been a problem for me, and I'm talking even 2008 and 9, selling the property has never been an issue. So when people have an illogical fear of being able to sell a home, it's just that. It's illogical. There's never been an economy that you couldn't sell an A-plus property that was priced well in any economy, right? They always sell. The issue where your money really gets screwed up would be, hiring the wrong contractors, getting fearful and making bad choices and, overreacting to things. But I've had millions of dollars lost in budgets and overages with contractors, but I've legitimately never I've had almost no losses when it comes to selling things. Because when I lose money, it's not because it's sold for 100K less than I thought. And if it ever had times when things sold for less than I thought, it's because I looked at too few comps and didn't really dig in. That's why I'm such a stickler about digging in right now and really seeing the overall picture and understanding what's going on. And the second thing is, and the reason I wanted to tell you that the number one way that you could not make money would be the rehab part. But what I want to tell you is that, and Ray proves this point with all the houses he does, is that when you got a newer home, the rehab part becomes really awesome, right? It's a lot less easy to go way over budget when your house is 20 years old. When you got a house that's 100 years old, it's a little different story, right? I mean, you have to be more selective. You got to pull out more of the, you know, you got to have some good game. You got to make some good choices. When a house is like 20 years old, dude, it's like, it really is a great first house for that reason, because your real risk is you going way over budget. That's a real risk. And that risk will be really greatly minimized by the fact that your home isn't super old. You're not doing a ton of layout change. You're really just not doing a lot to the place. You know, you're going in doing some really basic stuff to the house. Everything you're doing in the house, it's easy to get somebody off Craigslist to do for you. You don't even have to have like licensed professionals, and you can get somebody to do all that stuff. It's basically like carpet, paint, a little bit of carpentry, and a couple cabinets, things like that. So saving a lot of stuff really, really helps you, by the way, like big time. So know what your risk really is. There is always risk in house flipping, but just understand truly what the risk is. And you know, coming from back in the day when we were in a market that was way worse than this, and a really bad market, and you still could sell a house, you just couldn't sell a turd anymore. You couldn't sell a house that got rehabbed by sloppy people or that people overpriced. Like, you know, in 2007 and 6 and 5, you could overprice your house, you could under rehab it, you could just put a turd on the market, do everything wrong, and people would buy it, which would convince you that that was how things were, right? So you start thinking, well, yeah, okay, that's the standard. That is the standard when the market's insane, right? That's the standard when the market's insane. When we have a coronavirus or we have like any kind of downturn, then people are just buying the best stuff now. And you are uniquely qualified to put the best stuff out there, right? I mean, part of being in this group is I can show and teach you how to put an A+ property out that people will buy. You know, because a lot of people still be buying homes, and like you've seen, there's been no slowdown. Like everyone on the call, for new people on the call, we asked Ray, and he sold a house like just a couple days ago. I think Micah actually talked about a house he just put on for his client, and he said he got like multiple offers, like I don't know, 10 or 15K over list. Just did that like the last couple of days also. I just put a house on the market for a friend of Sabrina's today, the 10 o'clock, and I got 6 showings already today. Like they're coming to my email, and it's like insane. I got 6 showings and people going crazy already. So I'm pretty much assuming that the market is still doing really well, and the interest rates are driving people not to care about Corona. When I say people, I mean a subset of people. There's plenty of people who do care, and there's plenty of people that will, and there's definitely people who aren't coming out to see these homes. But, you know, it might be the difference of getting like 3 or 4 offers versus getting like 10 offers, but you're still getting offers. That's all that matters, as long as you're putting a good property out. So that rule never changed, though, by the way. I've seen people even in, like I've had people call me in this economy we're currently in, you know, well, the one not we're in today, but we were in a month ago, which was insanely good, right? I've had people call me and saying, Mike, my house is sitting, like, I don't know why, right? And I can't sell it. And I'm like, it's real simple. It's overpriced. And they're like, well, it can't be overpriced. I'm like, it can't be priced right, because anything priced right now would be fought over, period. So that's just the bottom line to it. It's always price. There's always a reason. So if you pick the right price to sell your house for, you never actually have to worry about selling it on the back end. But for whatever reason, when people are newer to the game and it was my fear when I first started. It was like, what if I can't sell it? What would I do? But it actually, 11 years later, over 1,000 houses later, I realized, oh, wow, that's not actually something that ever happens or I've ever seen happen to anyone else. Like I've never seen anyone. Now I've seen people use an ARV that was 60K higher than they should, and then they couldn't sell it because they priced it 60K higher than actual value. That's pretty common, by the way. So when you hear about people saying like, Mike, I can't sell my house, the first question would be, obviously, you know, how did you price it? Because that's always going to be the thing that tells or decides whether you can sell a home. In any market, there's a price that every home will sell for. So just know that every market you can sell something for some price. And you just need to know what that price is. Right now, price is driven by interest rates, and interest rates are lower. So they're actually driving prices up currently because people can buy a lot more house today than they could 2 years ago. So that's kind of a cool thing to understand, that you can actually get a lot of house right now just based on everything that's going on. So anyhow, man, don't worry about selling it on the back end. Worry about getting it done correctly, making it nice, making sure it fits all the, you know, the style of the people you're selling. So really mapping out the renovation on it is more important than worrying about like, you know, oh God, will I be able to sell it on the back end? The answer is you'll definitely be able to sell it. I've never had anything sit unless you did a crappy job or you tried to like, you know, what most people do is they'll take a 30K renovation and spend 60 and then be like, I'm selling it for $399. like I think everyone on the call has seen this enough. We have actually see it when we comp today. We were comping a house today for Ashley, and it was interesting to see some properties that sat on the market for like 60 days. And we're like, man, why did that sit for 60 days? One guy listed a house that he sold for 260 for 360. And I was like, well, okay, that makes sense. He was 100K off. That's like, I've seen houses sit if you're 20 or 30K off, they'll sit. But 100K off is insane. But like you got to have it right. And when you get it right, though, you don't have to worry about a house selling because, if you price your houses conservatively, like really aggressively low or, conservative on the right side, then you're going to get people fighting over your homes. So whenever we are looking at ARVs, we look at what we call the ARVF, the after repair value fast. Like, what is it going to take? What price would I have to put this for it to move and for me to generate a lot of interest and a lot of excitement around my property so that it doesn't sit and we can get rid of it quickly? And the answer is if you price it well, that's going to happen. So, and what other questions anybody have? Anything they want to jump into? Anybody have a deal they want to review? I know, Marlo, you're looking for deals currently, and Kim's probably looking for deals. Let's see. David has just got a deal that we all love. What I would be doing is telling David like how dangerous his deal is currently, and maybe he wants to wholesale it to us for 5K. Because man, I don't know about this. I don't know about this whole thing, man. That might be your better bet right now. Be telling people like, "Oh, it's real bad, but can I buy it?" I mean, that would truly be happening. So David's got a good deal right now. I know Brian's looking for a deal, and Tom's just kind of getting his head wrapped around everything. So probably just like wants to see some stuff. And most time, 30 to 60 days, Tom, we just kind of like look at comps. We learn like the comping part. We're studying. We're asking questions. Eventually, it'll come together. It's actually a great time too because as you're getting to know it. So once you get to know the market well, then like a Corona doesn't matter much. Not much matters, honestly, right? There's always a way. My first mentor, my very first mentor, told me something that I don't repeat much of what he said, but because he had a lot of things that were great, but not some things that weren't so great. But he said there's no such thing as a bad economy when you know what you're doing. There's just different ways to invest. And I today it's like one of the few things I would ever repeat from him, but it is really a super true statement. And I think it was his original statement. So it was a very good one. And he's like, so, because fear I had is he was my mentor in 2007, 8, roughly around that time. And I'm like, look, the market's crashing. He's like, don't worry about that. He's like, that's what suckers worry about.
What was his quote again?
There's no such thing as a bad market. There's just different ways to invest in it. So whenever things change, you just pivot and invest differently.
Hey, Mike.
Yep. Good. Hey, Marlo.
Hey. Yeah, I've got the stage you're finishing up tomorrow for Gulfston. Just wanted to talk to you about like the process about getting it listed.
Yeah. So Marlo, I'm sorry I didn't respond, but because I was thinking about the question, it was a good question. I normally have the answers right off the tip of my tongue, but I think I basically have answered just what you've heard though, is like essentially everyone is reporting to me that houses are still getting shown. Like Micah said, he just had one that sold. I just put one on the market today. It's got 6 showings. So if that's the case, then we definitely want to stage it. We really don't ever want to put the house on the market. And I would think that it's even more important to stage now so that your house stands out above and beyond other houses. Right? We want to make sure we price it well and that we stage it well. The only thing that Jesse said that you need to get, he's like, you need to get an electrician back in there because he said there was a bunch of things that weren't working electrically. And so what he meant by that, he's just like the box that he hooked into didn't have any power going to it. So I can ask him and get more specific and text it to you, but he's like, you probably have a couple electrical things you need to tighten up a little bit. Just to make sure everything's working. Did you do your inspection? Like, the inspection list where you get that little plug and you just make sure all the lights are working and everything?
That's actually the last thing. I think I have one of those tools. I haven't done it yet. I'll do that. I can do that tonight, actually.
That would be a good idea. Just confirm everything's working. He said that the AC is not going to work because it's like the plug box or something needs to be connected. He said there's a couple electrical things that still need to be done. I'll text him and ask them to tell me what they are, and then you might want to just make sure the big stuff's done. Because again, like right now, I would definitely put staging because staging is going to make your house nicer, and I would very much focus on just making sure everything works nicely. And the buyers have a really good experience when they look at your house because it's really tight, everything's working. Nothing worse when they go into like a room and the light don't come on or something and they're like, oh my god, is the house going to burn down? Like that's the last
Right.
thing. It's gonna burn down while I'm dying of corona. Like they don't need any additional drama right now, right? We got enough going on.
Yeah.
So
Yeah, I meant to ask you about that, the AC thing. I think that was the last piece. I've been trying putting it. I mean, from hearing you say that, I mean, I don't think I can get the AC on right now. So I'll get Todd to come out and kind of finish up the electric because he said he'll do that for me once it's set up.
oh yeah. So if he has a question, tell him to ask Jesse. He knows Jesse.
Okay.
So if they ask, you can ask Jesse, and Jesse will tell him if there's any question.
All right, cool.
I'll try to figure it out for you because Todd's good. I forgot you're using him. He'll take care of business, so he'll get it all right. Jesse probably didn't know it was Todd who was doing it, but that's funny. Anyhow, so yeah, man, you're ready, and yes, I would stage, and it sounds like then you're ready. When are you ready? You'll have it all done then. You're probably trying to get it on the market this week.
Yeah, staging should be done tomorrow. I'll call Todd to see when he's coming. Just hook it up, and I'll test the outlets tonight. So it should be
Cool.
done.
So
Good this week.
let's talk tomorrow, and we'll look at some comps and stuff together, and figure out list price, and just make sure we got it all done correctly, and we'll get it on the market quickly. Okay. So I'll
Sounds
make sure
good.
that happens for you. We got to get the photographer out there then, because even if Todd's got to do it, then I'll see if when the photographer can come take pictures.
Mike, any more update on your boot camp contractor weekend?
Yeah, I mean, I don't know when it's going to happen, so we're going to do it online just right now. So we'll do it online, and then when we can do it live, you guys all be able to come to the live one too. So obviously, it'd just be an extra bonus. You'll get to take it twice essentially, but then live, and maybe we'll do something a little different when we do it live. It'd be cool because I don't know when they're going to let us back in. That part. So I know that they're going to get back to life being normal, but probably not going to be having like for at least a few months like crazy events with 100 people in a room. That's probably not going to be an optimal situation for at least a few months. So I'm sure they're going to let people get back to office work, try to get back to certain things. There's going to have to be some restrictions on it though. So not likely will we be having any concerts or things like that anytime soon would be my guess. Because that would be somewhat irresponsible to put like hundreds of people in a room and pack them in like sardines. That just seems problematic, honestly.
Like, I have a question whenever.
Sure. Go ahead, TJ.
Do you put escalation? You ever put escalation clauses in your contracts?
Making an offer?
Yeah.
Yeah, if they'll let you, sure.
Okay.
I mean, I think if the agent you're working with knows what they're doing, which most don't, which is a good thing, then you can escalate anytime.
Yeah,
But what I normally do is I try to put my best offer forward and try to get figure out the numbers.
Yeah, I lost a house in Lynchcombe. It was another like historic Lynchcombe house.
Mm-hmm.
And I was about to kill the fucking real estate agent. I'm like, what are you doing? I was like, just tell me how much you want for it. She's like, well, I can't tell you that and all this. And I was like, well, I did what you said. I said, you would write the offer for us and all that stuff. You know what I mean? And she was like fighting us about it. So,
well, that's okay. But you got to put your best offer in. Is that like, keep this in mind. If it's on the MLS, you're going to lose deals all the time if you second guess yourself and think you're going to get a good deal no matter what anyone tells you. Now, you know how many times I've had an agent tell me, oh no, I can get that done for X. And in Linthicum, by the way, it was the last time it happened. Realtor said, no, we'll get that done at that price, which was 10K over. But I really started looking at the deal and said, man, I could have paid 20K over. But he's like, no, I can get the deal done at this. And then thought I had the deal. I was like I actually started doing drawings and everything. I'm in there working. I'm like talking, I almost pulled permits. I was that close to started pulling permits. And I'm like, what's going on? I've never seen a signed contract. And he's like, oh man, I forgot to call you. They went with someone else. And I was like, what? Are you crazy? Like,
that's exactly what happened.
Exactly. So it might even be the same agent, by the way. But that happened to me because what happened when they went with someone else, he didn't have the heart to come tell me because he kind of basically ensured me everything was good. So what I kind of was reminded of with that situation is that in any deal, you really got to look at what you can pay and just pay it, especially in Linthicum. This is a more true statement in Linthicum than any other neighborhood because of how highly competitive it is in Linthicum. And it's very difficult to get deals on the MLS in Linthicum. But if you are going to get it, you got to bring your A game, right? You can't come in a little less because there's people that will come to that agent and aggressively punch them in the face to take their offer and be like, whatever you need, I'll give you the back end listing. I'll give you $10,000 in Bitcoin on the side. I mean, there's stuff that they'll do and they'll just be aggressive about it. But the one thing an agent can't do is throw your offer in the trash. But, so your offer needs to be as strong as it humanly can be.
Yeah.
That's pretty much kind of the science behind it. So when I briefly looked at it, it just looked like you offered like at least 10 to 15K less than you should have. And you probably still would have been a very high profit deal if you had offered 200 plus even. And
Yeah.
it may have got the deal through. You might have still lost. I don't know. But I always look at it like this. If I put my best foot forward and I make my strongest offer, the main reason I enjoy doing that is because, well, I want to know when I lose that I did everything I could. Because I'm like you, man. I can just tell, like, looking in your eyes right now, you don't like to lose, and neither do I. And so I kind of like realize, well, I'm going to lose quite a bit if I don't put my best foot forward. And what'll cause you to take and pull back a little is letting, like, subconsciously, like, being way too loose about things, like saying 90K for the renovation when you could definitely do it for 70, right? You got to be able to drill that down, because 20K is generally a difference in winning and losing. Or, saying, you know what, I know it's at least 375, but maybe it's 385 or 395, right? These things, like, and if you do that, like 10K on the back end, 10K on the rehab, that's 20K difference that you're offering. Somebody like me comes in and I'm going to put my best foot forward. I'm going to win most of the time. And I'm going to find a way to convince them to not actually accept your offer. So I'm assuming they didn't just give it to someone else because, I'm assuming they didn't give it to someone else because the offer was the same. Probably the offer was considerably better. And, but
No, it was exactly the same.
Oh, that was because they were cash though. So see, if you had been 10K more, they would not have cared about anything else.
Yeah.
When it's the same, then it's different. So this is why you got to be like straight. Like, I mean, you offered 185. Was that the number, if I remember correctly?
Yeah, 185 and 10,000 down.
Yeah.
They took 185 cash with 1,800 down.
Well, that's dumb, first of all, because 1,800 is like basically like it don't even exist. That's an awful offer. But the cash thing is stupid. So, but point is, if you would have been 10K more, $10,000 down, there's no way to get around that. So I like the reason I put my best foot forward is I want to make sure if I don't get it for 195, let's say I pay 10 or even 15K more. If I don't get it, I want to know someone else paid too much for it. So if I pay the absolute max I can pay for a property, the only way I can lose is if someone else pays too much. And this is my thing. I want to know that if I lose a deal, that I got another house flipper to pay too much. And if I get enough other house flippers paying too much, then guess what? Eventually, they're going to start having problems, right? Eventually, they're going to be like, house flipping sucks because I keep doing this and not making any money.
I was pretty aggressive with it. I went over to the guy and talked to the guy who owned it, who's doing the landscaping out front. I was like, how much you want for it right now? You know what I mean? And he said 177 and $10,000 down. And the agent was like across the street. I walked over there. I grabbed her. I was like, let's do this right now. You know what I mean?
Know what happened? No, everybody was like, no, or?
Yeah, she was like, no. I got to show him this offer. I was like, he's right over here. I'll write you a check right now. I can't do that. I can't do that. I was like,
yeah. So she basically blocked you out and probably, but you got to put the offer in. Like whenever you think you're going to get a deal in the MLS, I can just keep saying this over and over. You're going to be sad and this will never change. I've had the same sadness you're feeling right now 100 times in my life. So I didn't learn this lesson easily. Maybe you won't learn it easily. I don't know. But I've had the same shit you're feeling right now at least 100 times in my life. And it took me 7 to 8 years before the things I'm teaching you right now for me to truly understand it at a high level. But like, I'll analyze the deal because that was actually what we were going to do tonight. I want to analyze the deal. Do you mind if we like just go through it a little bit?
Yeah.
Cool. So let's, I'll screen share because we did an analyzation earlier, but I didn't want to do the same one because some of the same people are on. I feel like it would probably be more valuable to just do a new one and we can go through. So I'll go ahead and get it because I'm sure it's on the MLS. Let's jump on here. You guys can all see my screen, correct?
Yeah.
Yeah, cool. And so basically what we'll do is we'll run through and I'll tell you where my offer would have been. So if like I was looking at houses right now, I'll tell you what I would have offered. And you basically just based on what I would have offered, you can be like, well, that probably would have had a much better chance. Because see, I'm not thinking about any one deal, right? TJ, it's not about how you lost this deal or why you lost this deal because shit happens and not everything goes perfectly, right? You're going to lose some deals. I just want you to feel certain that you did everything you could. And when you have that certainty, you sleep well at night, knowing like, dude, I did everything I could. And honestly, if the other person settles, they're probably going to be paying too much and not going to make any profits. All good to me, right? I'm fine with that. And then I'll just go to the next deal. And I know if I'm putting, the way I look at this is like, if I do that same activity correctly over and over and over, I'm going to win a lot more than my fair share of deals. And that's the way I look at it. But if I go in at 185, likely you're going to not win. You're barely even going to win your fair share because you'll always have something that comes up. You'll always think that, oh, I can get it cheaper. It's a little bit when you think you can get MLS deals cheaper, like, dude, you got to get off the MLS then because MLS, You're going to get good deals on the MLS that can make money, but you're probably not going to be hitting 90K home runs on the MLS. That's just the way it is. Like nobody's going to let you because it's out to the open market. So like the best edge you can create would be just being able to get the work done cheaper, faster, better, getting Nikki to sell it a little more on the back end by, getting people to fight. That's how we create higher profit margins than everyone else, because we don't really control what the fair market will sell it for. Now, if it's not on the MLS and you're dealing with someone privately, that's a complete different story. Like I think you had a deal recently you bought, and you bought that privately, and you bought some of your deals privately. Very different story, because privately they're just talking to you. So you're not going to have as much come up when it's private, but when it's on the MLS, know that not only that person's talking with you, and that person has 1,900 people beating their door down. Like right now, my phone's ringing as we speak, beating my door down, trying to get me to like answer the phone so they can try to convince me to take an offer, I'm sure, on this other house. I'm sure that's what's going on. So let me know, what's the address? Because people now, like once the world knows you exist, dude, people come out the woodwork. They door knock, they call, they reverse, like they'll do like reverse searches for the owners and call the owners, and it's insane the stuff people will do.
The address, Dogwood Road. I can't remember the Dogwood.
I can find it. 1 second. I got an email you sent me. Or maybe it was a text. Let me look and see. I think it might be a text.
It is 500 Dogwood Road.
Okay, 500.
Upstairs in a room by yourself.
All right, detached house. Let's see. Go back a bit and see. So basically, I just want to show you right now, you offered 185, and let's just look at the comps and then look at the renovation. Let's start with actually looking at our subject property so we can get a feel for what that looks like. Probably on the low end of what's going on. So that's pending. This is it right here. So got 4 pictures. Nice house, obviously. It's Craftsman. That's a true Craftsman right there. It's a really nice one. This is in a phenomenal area of Linthicum. Looks like you've got a lot of cool stuff going on, a big lot. I mean, you got a little, I don't know what that thing is, but a little house, but it's pretty cool. And let's see, you got 1,300 square feet. You could finish the basement also?
No, you'd have to dig it out.
Okay. So was your plan just to do like first floor, second floor?
Yeah, it's already demoed.
Okay.
Yeah, first floor, second floor. It's got 3 upstairs. You just have to maybe add a dormer, bump the dormer out like I did the last house.
Yeah, it's on a half-acre lot. That's pretty cool. On the market 2 days. Makes sense. You were on it, so that was quick. All right, let's take a look. Let's see. So the basement, how tall is the basement to be exact? Was it like 6 foot, 5.5 foot?
6.5 probably.
Oh, so you might be able to do a luxury unfinished down there, though. That could probably squeeze you some dollars.
Yeah.
Maybe put some carpet and a wall in there. That would work. So obviously we know that one's not going to work. That's not really comparable. Like these are all kind of newer homes. This one on John Avenue is too big, too new. Most of the higher price ones are going to be too new. Maple Avenue, too big. Too, not it. You'll get close soon. Here's one on Maple Road. It's a rancher. It's 1,700. It's a little too big. Let's see. You got this one, John Avenue again, 1,900. Okay, so here's the first one that's too big, but it looks like yours, but it was too big. Now this one's probably the first close one to yours. Let's just click that. Now this one here is too big. This one's too big. Okay, that actually is your house. Oh God, that's your house, right?
Yeah,
Okay.
That's the one I sold.
Yeah, that's the one you sold. So that does look just like the one you sold. I mean, it's like really close. And that one, not so much. And yours didn't have a finished basement either, so that's perfect. You can almost use yours as a comp.
Ours was luxury unfinished.
You did the luxury unfinished? Okay, cool.
Yeah.
Okay.
Would you say a luxury unfinished?
Yeah, well, so if you go on the Facebook group, Tom, there's a video maybe a week ago of one of my flips I did recently, and it'll tell you about what luxury unfinished is. It's when we take a basement that's not legally tall enough to be finished, and instead of just leaving it like just unfinished and dark and dreary, we put some lights in it. We run some plugs with wire molding around the wall. We don't do framing and sheetrock. We'll paint the ceiling joist flat black and the walls a nice color, and then we put carpet down and we got plugs and we put a heat source in it. And effectively, it's very usable space. It's not legally finished, but no one really cares if it's legal. They just care that they could let their kids play down there. They could, watch football games or, whatever, right? Go band practice, something. It's usable space. And it only costs, if you think about like the electric, the carpet, and a little bit of paint, it's like $3,000 to finish a nice room in the basement. And we can do that when we're over 6 foot tall. But not up to 6'10" is our code here. I don't know what it is for you, but it's got to be 6'10" in the basement to finish it legally. So if we're like 6'4", 6'5", instead of digging it out and spending 10 or 20 grand, we just do the luxury unfinished, which gets legitimately 80% of the value of finishing a basement because it's so usable. But we don't list it as finished. When people get there, they're happy to see it. So it's good. It's a little bit of a workaround that we found in these very rare situations where exactly where he is right now, where you could do the luxury unfinished. Your other house his other house was a little over 6 foot, but it was pretty small in general. But luxury unfinished, he did get 385 for it, so which was a high number. So this one here, let's see what that looks like. It's a rancher. It's been renovated. They didn't really open it up. Your house would definitely be nicer, no doubt. I mean, I probably could say that's true for most of any house you're going to see in this neighborhood. Because this neighborhood, it's just carpet and paint, right? It's not going to be. Nobody's going to have a half-acre lot. They did get 400K. It looks like they got a finished basement. Got some beds of 4x2. You would have that. You might have more of a 3-2 potentially. I don't know. It's a nice house. It actually looks like it's got a decent lot and everything. It does say above grade 1,800 here for some reason. I'm not sure why that is. It says 1,500 here though. Oh, well, maybe, I don't know. They might be talking about some additional stuff. It's hard to tell. 0.27, so you got a quarter-acre lot. This is went 4,320. So they got a lot of money for this. So they got a lot of money, 400K for it. That's pretty insane. So we come to this next house. This is yours. So, I mean, we know this house. This is the last house you flipped. So pretty easy comp. You can see the difference in quality of the flip. Your guys' flips look really nice and it really shows. Not saying that other flips look like crap, but it kind of did. It wasn't great. Your flips are usually really nice. And there, look, that's not the luxury unfinished air.
Well, I just didn't do the carpet. That's all I didn't do.
Well, then you didn't do luxury unfinished. So this is unfinished, right? Luxury unfinished would be not having this weird stuff on the wall, which TJ had no choice on, but he kind of did because he could have ripped it off later and then just taken it. So what I would do for a luxury unfinished, so I can show everybody, can you guys see my cursor moving around?
Yeah.
Okay, so what I would do, this wall right here, I would frame that wall in, and then everything on this side, when you first walk down the steps, I would peel that off the wall. I'd put carpet down. I'd put some wire mold. I'd have a duct right here to heat the room. And you'd have a wall with a door to the unfinished space and paint that one wall, paint all these walls, whatever color. And this would have a painted wall. It'd have carpet on the floor. It'd have a heat source, and it would have plugs going around, which would make it a very usable room. So the cost of like putting carpet in this room, a couple $100, painting the wall, the ceiling's already painted. So painting the wall, a couple $100, installing some electric, maybe $300 to $400. Then putting like a wall here, maybe $500-600. The $2,000, $2,500, we could have finished this room and made it like luxury unfinished. And like legitimately, people would have said, now they're just looking at this as storage. But if they would have done what I was going to do with luxury unfinished, they would look down there and feel like, oh, that's more space we can use. Now you guys had a pretty short basement. I can't remember. Was it over 6 foot or was it? You didn't hit your head, right?
It's about 6'1".
Okay, so that I usually do it above 6 feet. So 6'1", I totally could have done it. And you obviously had a buyer and all that, so you didn't need to do it. You're also in Linthicum, so you can get away with more stuff. But when we're in areas where finished basements are highly important, like a lot of the areas I'm in, I notice if I don't have some level of a finished basement, it greatly diminishes my value. So I think this, who knows what this could have not done, but you got a great number because you had an inside buyer. Put on the open market, though, adding these couple things, and you could have done this after you got it finalized, right? Because no one's going to know you tore out that little bit of wall insulation and just painted the regular wall. It was stupid they made you do that anyhow, and it's sad you would have to tear it out, but I would do it just for the purpose of this would not be viewed as a like finished usable space. It would just be viewed as storage. But as soon as you put that wall in, a couple plugs, a little bit of carpet, painted this wall so it didn't have that weird stuff on it, it would feel like a finished space. It would feel very usable, right? Little urban, right? Because like when they take and they paint brick and they paint block walls and stuff, it would feel very urban, like with the black ceilings and all that. But it would be usable. Someone could actually use it. I mean, I started doing this on my rentals. This was a move that I did on my rentals before I ever did it on my flips, because I found out that like when I have a 3-bedroom, that 4 bedrooms rent better. But even though I can't get like credit for the bedroom in the basement, by having a room in the basement that I would finish, I realized a lot of my tenants would put like a niece, a nephew, or someone in the basement. As long as it had painted walls, carpet, a heat source, and electric, someone would be living there. So I'd seen people do it in my unfinished space, by the way, like this, and I'm like, crap, if I actually made it feel like a finished space, they would see that as usable space. So what I would get is a lot of people who really would pick my house over other houses, because let's say that it's Section 8 and they get $1,500 voucher, but they only have a 3-bedroom. But what if they really need 4? What if they really need a 4th bedroom, but they don't have a voucher for the 4th bedroom? Because maybe the reason they wouldn't have a voucher for the 4th bedroom would be Section 8 only gives you a voucher for kids you have that are under 18. So let's say you got a kid that's 19 living with you, right? That's who gets stuck in the luxury unfinished basement, is a 19-year-old kid who hasn't left the house, but they can't get a 4-bedroom for that kid because he's over 18, and HUD won't let them get that. So if they see my house, which technically had a space for a couple more grand that they can put the kid in, well, they would choose mine when everyone else's would sit on the market because everyone's just fighting with a 3-bedroom. And I technically have like a usable 4, not a legal 4, but it is usable. That's how I would get my houses rented, by doing that. So, and the cost of it, like I said, is a few grand, but I would often get tenants that would not only come in and choose me over everyone else, but then they would stay I had an average stay time of 4.5 years, which is the secret to success when you're a landlord, is getting people to stay, because turnover is like what kills all your profit. So that I started it by doing that, right? It was all about that hack of trying to, create extra value so people would pick me in a down market, right? When we had kind of, back when I got started with this. But I started recognizing the opportunity to do it recently. Just in the last like year or two, I started thinking about doing it again, because I'm like, it really don't cost anything. Why wouldn't I do it for a couple grand? Like, do you guys think that like when a big space like this being finished and it costs say $3 grand, you think there's any chance that you wouldn't at least get $3 grand or more for the property? My opinion, probably not. I mean, I'm thinking you're always going to get you might even get 10 or 20 grand more because of it. So you're definitely going to create upside by knowing that, somebody might look at this and be like, oh, wow, it's finished down there, even though it's not legally finished. Because see, everyone gets focused on whether it's legal or not. And the reality is legal means nothing. What it means is usability is what means everything. So, yeah, you guys got 385. There's no help on this, right?
No, there's no inspections, no help.
Okay. So, I mean, I'm assuming you guys use the comp of like the same comp essentially.
Yeah.
Okay. Which this is a rare situation that you got the 385 because you got it privately, but I don't doubt that house has a bigger lot. If you did the luxury unfinished in the basement, I think you can get 385. Let's see. We didn't really have a lot of pictures of the house, did we? We did look at it, but was there any pictures?
No pictures on the inside.
There's none of the inside. Okay. So you said the house has been demoed and it's only 2 stories, and do you really need to put a dormer if it already has 4 bedrooms and 1 bath? Couldn't you just make it a 3-2 above grade and then finish the one facing the
There's
basement?
only 3 bedrooms.
3, and there's not one on the first floor?
No.
Okay, because it said in the listing there was. That's why I was asking.
I mean, any room's a bedroom if you put a bed in it.
Well, I get that. Like the kitchen, right? Just throw a bed in the kitchen.
Yeah.
Who needs a dining room table? Just put a bed in the kitchen and be like, it's 9 bedrooms. I got one in the kitchen, one in the closet. I have actually seen a place where somebody was sleeping in a closet before. And so, yeah, you're right. People can make
like Harry Potter.
It was like a walk-in closet. And there was like this dude had an air mattress in there. And I was like, you guys are optimizing this space, man. Like big time.
Yeah,
I guess it's better than being homeless, right? So let me take a quick look and see if we can locate. So no pictures, but if you're only renovating a 1,400 square foot house, you said you would have no room. So you're thinking that the only way you can get a master would be the dormer, because if you put a small dormer, that would help you make one of the 3 bedrooms a master suite by being able to add that dormer and get like a additional space for the bathroom and closet.
Exactly.
Okay, so that dormer is going to be a lot cheaper. I just built a dormer like that this weekend, actually, and it took 3 guys 2.5 days to do. And
that's what we had to do in that last house. We bumped out a dormer.
You had like multiple dormers there, right? Didn't you have like 2 or 3 or just one?
No, we just bumped the one side of one dormer out.
Okay, good. So very similar. So I mean, honestly, so you know that's like 5 to 7K. Call it 7K. The rest of the house, though, I mean, you what did you put the numbers at? Like 85K or 80K in work, or did you say 95K?
Which one?
That's this house. What were you thinking in work?
Oh, 85, and that's on the high end.
I do think that's on the high end, but obviously, because I think you can cut it down now. You did spend. The problem is, in Hawthorne, you spent more than you wanted to spend, but you've discovered some new stuff that I believe is going to change the dynamic of what you'll be paying in the future. So, like, actually, like, really getting like cheaper labor, and it's really a good time to do that because there's a lot of people sitting home that really could, use some work, and would love to come just work with you for a few days here and there, and they're pretty good at what they do, right? Could actually kind of bring some of this stuff home for you. So,
Well, and the Spanish guys have a lot more personnel they can draw from, because the one guy I talked to today says a lot of them are laid off from the restaurant business right now.
oh, true, yeah, for sure. So, yeah, this is what I was thinking. Okay. Oh, you can't pay 20K for it. Sorry about that. You gotta pay 200. So, I mean, this is where I would be offering. And honestly, if I was really loving the house and felt really good, I'd probably be like 205 even, because I'm just like, I don't like to lose. Because I'm okay doing that house and making 39K. And I know that, like, and look, all the other numbers work, right? These all are very close, but I mean, I would at least pay 200. I might pay 205, but at 200, I'd be all over it, right? I'm thinking it's a really good deal at 200. Now, also, oh crap, it didn't change. Something else went wrong. Oh no, it's still good. It's 44,000. So yeah, I'm really good at 200. I'd be like, I would do that rehab like over and over and over the rest of my life. Also, by the way, here's the thing too. I forgot you guys aren't paying commission because your wife is a realtor. So that actually puts you at 54K. So you can see that means you could, this is how you win the deal, by the way. Right, here's how you win it. Yeah, there you go. 42,000 bucks. You're only paying half a commission, so you don't have to pay the other side. 85, like you said, you feel like that's on the high end. So there is a chance you could try to squeeze that down and get it done for less. And that would actually create more profit. Also, there was a 400K comp. So I do think like right environment, you get that luxury unfinished, that big lot you got. It was very special looking home, right? It was very nice, very, very unique and special as far as like the neighborhood, and people do pay more. So if I was using these numbers, the reason I would use these numbers is because like I am totally fine making 42,000 if it only came in at this number, but I really honestly think I would be shooting hard to try to get like a really great environment to get more than 385. And I'd be trying to like find a way to cut 85 down, because 85K is a lot of money on a house that you're not really finishing the basement. You're not, let me stop it for a second, see what's going on. It's really hard. I don't want to mute myself. I end up muting myself a lot. Sorry about that. So yeah, so the reality is that 80 making this kind of money, like there's probably a chance you can cut this down and get more here, which just pretend that we did. I mean, even if you just got your numbers 42, but pretend that we, create a really good environment, you just got 391 even, right? And then you come up here and you're like, you know what, Mike's right. Well, that's only I could sell it for that price. Let's do a 391,000. That'd be better. Let's pretend that you didn't get it greatly down, but you got it down to 78,000, right? That's a little cost cutting. It's not dramatic either way. You look at your deal, what happens to it? You're making $55,000 on the deal. Like, look, man, if you're buying houses on the MLS and you're making like 30 plus, you're killing it. And if you can make 40, you're really killing it. If you got where you start making 50 here and there, you don't have to do a lot of those to make really good income. Like that's like 4 or 5 houses a year to really do well, like to put some really life-changing income in your pocket. The secret to it is every time, like, and I think Ray's still on the call, and if he is, he'll attest to this. Ray, just let me see if he's on the call still, because he's probably getting good deals on his insurance and stuff right now. He really crushed that insurance. He was like talking about he was paying $3,000 a year for it. I think he just got $900 price on it. So he's not on call, but Ray just did this recently where me and him were talking about trying to increase his profits. And what he did to increase his profits, he started offering less, and he was just offering 3 to 5K less on the deals. And what he quickly found out after like 3 weeks, he usually can get deals pretty quickly like me. And he's like, Mike, I don't know what's going on. I'm losing. And I'm like, what are you doing different? He's like, well, we're talking about getting our offers up. So I've been offering just a little bit less. And I'm like, yeah, that's why you're losing. because at 3 to 5K, you're offering less. I wasn't talking about getting it up through buying them cheaper. I was talking about getting them up through, right, what we just did here, right? Cutting your rehab down by just even 5 to 7K, selling it for even just 5 to 7K more. And that 44,000 turns into 55K. So this is the secret sauce. But what really can't stop is this. This is determined, like, this is how you go into this situation and you start winning so much that you get the premium deals. Because see, like, that deal is a premium deal in a premium neighborhood. It's a really good deal in a really good neighborhood with a lot of upside. That thing's a fairly recession-proof neighborhood. That neighborhood has always been one of the best areas ever. It's just a great area, right? To get a deal in that area that's making profit is even pretty awesome in general. Because a lot of times people are buying stuff and not making profit. So if you go in at 211, do you think they take the other guy at 185? Probably not. Now, the thing that's going to always probably sabotage you in this environment is the self-talk that happens with that little, you know, the bad devil on one shoulder and you got the good devil on the other shoulder. Well, the bad devil's always going to say, well, what if you can get it cheaper? You know, do you really want to leave profit on the table? Well, why don't you just offer like a little bit more, right? It's just what it's going to do. It's going to try to convince you to offer just a little over list. Well, the bad devils caused me to lose like a lot of deals, and it's really made me sad because I hate to lose. And now I don't listen to him. I'm just like, dude, I can pay 211, and if I pay 211, I will basically eradicate any potential for dumb stuff to happen, like the realtor misrepresenting me, them deciding to take another offer. It's the same with a stupid low deposit. All that stuff pretty much goes away when I'm offering this. And I still get to make maybe anywhere from 40 to 55K on the back end. No complaints about that, right? I'm very, very excited and happy to do that all day long. Almost blessed to do that, right? I feel really honored to be able to go flip a house, do something I enjoy, and make 40 to 55K. And 55K, I feel really good about that, obviously. So, yeah, I'm not saying you've done anything wrong. I'm telling you what you've done is something I've done wrong 100 times, so don't feel bad about it because I preach it so much to you. I'm also convincing myself not to make the mistake because it's an easy mistake to make. That, like I said, that bad devil in your other shoulder is always going to try to sabotage you in this situation. You just have to determine and look at the big picture. Like, are you serious about winning deals in Linthicum and like getting the best deals? Then you will need to come like 100%. Like, you can't dip your toe in the water. You got to dive in and belly flop right into the water, right? And take the deals from them. Do not give, basically eradicate potential for anything to not happen. And if there's ever an area that you want to do this, it's in Linthicum because it's too hot. Okay. So that's kind of the end of that. Any questions from anyone else in the group around what we're talking about here? I'm sure you guys heard me talk about this before, but this is something worth talking about. And it's true in every neighborhood. And this is how we win deals on the MLS, is that we don't get greedy. Because as soon as I start getting greedy, Ray got a teeny bit greedy. Like, Ray's not a very greedy guy. I mean, he literally was just trying to put 3 to 5K on his offers, and it was enough to stop him from winning. I've done that in the past. And I also have a lot of times I've won deals where I've made crazy high offers and I went back and polled. Here's a great scenario. I had one that was listed for $65,000 in Brooklyn Park, which is the area I love. It's because I grew up real close to there. And I offered $105,000 for it. And it was only 65K. The other offer was $102,500. So $2,500 I paid over the highest offer. Now, do you think I didn't have discussions with myself when it's listed for 65K? Like, maybe I can get it for 90. You know what? Maybe 101. Actually, I did. This funny enough, me and Dave, my old acquisitions guy, I was like, why don't we just offer 101? Like, it's so far over list. And then literally I was getting ready to put it in 101. And I was like, you know what? Like, I can pay 106, pay 106. Or I paid like 105.1 is what it was, like 105,100. And I'm like, I can pay this, so just pay it. I'd be really butthurt if I seen someone got this for a few more grand. Polling the guy afterwards, he told me that he got 17 offers, and of the 17 offers, only 2 people offered over 90K. One guy offered 91, second guy offered 102.5. I offered 105.1. Every other offer offered only 5 to 10K over list. So this tells you about the environment. Now, do you think I guess this, so you get the numbers right. Do you think that the 14 people who offered only 10K over list and tried to make like I ended up making $55,000 on that deal, by the way. I sold it. I put 60K into it at 105, but at 165, and I sold it for 261, something like that. It ended up being like a $54,000 deal. So the people that were trying to pay 10K over list were trying to make 100 grand on that deal. And 14 of the 17 people tried to make 100 grand on that deal. Now, do you think that they're stupid, or do you think like they're super greedy? No, it's just really hard to pay over list, because lists will cause us to believe that we can get it for that price. Like, I imagine, TJ, probably part of what you fell into was it was like 176, and the guy says, I only want 176. You're like, I'm offering 185. Some level, you thought you were doing even better than what he told you wanted. But the reality is you can't let that trick you, right? I fell into that trap a lot of times where I'm like 10K more. And it's a really difficult, it's a hard decision to make. But I'm telling you, that scenario I just gave you, I got 20 others like that. Because every time I lose, I go back to the agent and I bug the crap out of them to tell me like who won, what was the offers and all that. And sometimes they will, sometimes they won't. But when they do, it's very enlightening to me because I just want to see what I did wrong. And every single time I did not go 100%. So I have a new rule that on the MLS, if it's a deal I really like and it's not a weird deal and something funky, I go all in like 100%. I pay the most I can pay, not a penny more, but I pay the most I can pay. I don't overpay. I just, obviously I don't think you buying that making 44K is overpaying. I think that's
we have a backup offer on it.
Yeah, but you do. But you know what would really, what I would recommend at this point, if you want to get real serious, is I think 185 is not a good backup offer. I would go back to them and tell them you'll pay 200 for it, which I think you're 100% like still getting a seriously good deal. But at 200K, you're 15K more. So why do you think I'm telling you to do that? Like, say the strategy of why I want you to do that. Let me. I already got rid of my deal.
I mean, have you ever had that? I mean, we're trying to figure out like how often do deals like that fall through? You know what I mean? And you get them on a backup.
Well, if you're at 185, not as often. But if you're at 200, do you think you would fall through more often?
Well, I don't know how legally that works.
Well, here's how it might work, right? So say this guy's buying it and he comes up with something. He's like, I found this and I don't like it. I need $5,000 off. They'll probably give it to him. Even though they know you'll pay 185, they won't want the headache. But if you're sitting in at 200, they're going to look for 80,000 reasons to get him out of the deal. He says anything wrong at all, or he shows any, like, I don't know if I'm going to settle. He asked for a 3-day extension, right? Oh, I can't even close now. I need 3-week extension. What do you think they're going to be doing? Like, they're going to be like, no, we're not doing an extension. You know why? Because they got a 15K higher backup offer and they're greedy. People will always, like, you sitting there as a backup offer is basically the fastest way for you to put a wedge in between their deal. Like, so I'm going to say that cash deals probably not falling apart as often, but if it ever was going to fall apart, your job, you need to go ahead. I personally would be like putting a $210,000 or $211,000 offer in their hand that I feel like would be drive the wedge in front of them. Because here's the issue. Even let's pretend that it did fall apart. You're assuming they'll just sell to you for 185. They might not. They might go ahead and put it back on the market. Then they might kind of do the same thing again, and somebody else gets the opportunity to come in and snipe you out. But if you're offering them something stupid for what feels stupid to them, like way higher and way more aggressive, then they're gonna look for every reason to try to get you in the deal. They're going to be butthurt at some level, which I think is the fastest way to get even with them. Like, if you feel a little upset that they just sold the deal off, how cool would it be for them to sell this deal at 185 and you got a $210,000 backup offer in? What do you think that's going to make them look like? You think that's going to make the agent look stupid? Like,
yeah, that's what I want to do. Because she's a well, yeah.
Yeah. Well, you get it. She felt like she didn't do what she said she was going to do. So, I mean, look, I'm not trying to be mean to the agents, but I feel like the agent would have done their job and came back to you and asked for more money, right? Like, if she would have done like highest and best, don't you think it would have been smart of her to come back and say, look, guys, we have an offer that's similar to yours. What would you would have then got on the phone with me and I would have told the same thing to you and you would at least went to 200 and they would have got 15K more if this agent knew what she was doing. So this agent obviously is not good. So relying on agents to be good is like not something you want to rely on because they aren't ever going to be good and they're never. So your job is to take out any of that stuff, right? Take all the variables out. So personally, I mean, I don't know if you're willing to do this, but if you really are serious, play all out, man. Don't stop. Even right now, go all in. I would call and be like 210 or 211. I'd put my offer in right now. I'm willing to pay. And yeah. I'd let them sit on it and just stew on it and look for any reason to get out of their deal. Period.
Okay.
They might not go to sleep tonight very well.
That's my point, and that's what I want, right?
Yeah.
I want them dreaming and thinking about this guy pulling out a contract. I promise you this, if you got a $211,000 offer sitting in, I promise you they're not signing any extensions. They're not taking any discounts. They're not negotiating anything. Like, and this guy asks for anything, they're going to be like, nope. Ask me how I know. I've had it happen to me before I was doing the test. I had somebody make me a 20K higher offer and as a backup, and somebody come and ask for like a 41 item inspection list. And I said, look, we're not doing anything. And I'm like, I told you don't come and ask for all those things. It was like the guy's father being like super picky and our lady's father and being super picky. And I was like, no, we're not going to do anything. So they even came back and said, look, we just want you to do the roof, nothing else. We'll take the other 40 items off. And I was like, no, I'm going to accept the other offer. I wouldn't even do one thing of 41 items because I knew I took the other offer and I ended up making a lot of money. It was 20K higher and they went to settlement and I made 20 more grand. Now I told them and warned them not to do that. And they did it anyhow. So I didn't feel bad about it because, you know, whenever the father comes in and the father's a contractor, it's always kind of a mess, you know, because he wants to protect his daughter and he wants, you know, it's always like they want to kind of like crap talk the house. And, you know, when they asked for that list, I warned the realtor, like I said, hey, we got a backup offer. If you don't give me something reasonable, they're just going to bump you out the deal. My partner's going to bump you out the deal. And he's like, oh, okay. And they gave me a 41 item list with a bunch of stupid stuff on it. And they were upset. So the reason this is smart is because like, if you go and put that offer, like Tom said, they might not sleep, but it gives you, if there's any chance at all you getting this deal, this is your best chance of getting it. The mistake.
All right, so it's something I need to do as soon as I get off the phone.
Yes. And most people would make the mistake of just hoping that stuff will fall apart and they'll get the 185. I prefer to take a more progressive action, more proactive action of saying, hey, I went back and talked and looked at this with one of my partners and just say something like, you know, one of my contractors, and he actually could do the work cheaper, which would allow me to offer you more, period, right? And we really love the area and we want to be aggressive. We want to increase our backup offer to whatever, but I would totally increase it to 211 because I love the deal at 211. But honestly, at least get it over 200. Just make it be a big difference. Because the more you increase it, the more likely it is to kill the deal for them, for the other guy. So
is there any, do they have any, does the seller have any leverage of pulling out of the contract himself?
Well, I mean, he does if that guy asks for anything, yes, maybe. But will they do that? Usually not. Not with this agent. This agent's too dumb. If you had a savvy agent, they could pull out. But no, they can't really pull out.
Yeah.
They can't really. I mean, they could if they knew what they were doing. Like if I was the agent, yes, I could pull out. But I doubt this agent. This agent can't even like, you know, this agent's clearly incompetent. Just how this whole thing went down. I mean, the fact that they didn't get you, the fact that you're willing to pay 210 or over 200 and they only got 185 out of you suggests that the agent doesn't know what they're doing.
Yeah.
You might be surprised how creative they might get and get really educated if that offer comes in.
They very well might be. Stuff like that will motivate people to become more intelligent about things for sure.
They might even go back to school.
Yep. They might start watching some of my videos. What's the agent's name? I'll send a video on how to get out of contract. So you send them the 211K offer and I will forward her an email with a video. Hey, are you under contract? And next thing you know, you got a backup offer. It's 20K higher. Well, most people think that you actually can't get out of those deals, but here's the 3 steps to getting out of that deal and getting your client more money so you actually do your job really well. How awesome would that be? Right? I mean, seriously, like they would want that, but I'm not doing the video because I don't have time, but seriously, put the offer up as high as possible. Everything Tom's saying is really true. Like they will get creative. I'm not saying you're going to get this deal. I'm only saying this is the best chance of you potentially getting it. And just making some people have some FOMO, if nothing more, right? I would probably be happy about that. Future reference, what you want to do, just go into the deal and stop listening to what people tell you they will do. Because like 100 times I've had people tell me, oh yeah, I'll sell it for that. And then literally, like a day later, they just sell it to someone else. It happens all the time, especially when you're talking to the seller. You know, so the key is like, if you know a deal is underpriced, don't ever believe you're going to be able to sneak in the front door when it's on the MLS. If it's one-on-one, like you do get a lot of one-on-ones, and when you have one-on-ones, there's a little different story. You know, you can definitely be more conservative with your offer. You don't have to push it, but MLS it's going to be out to the world, and you need to, fight for it accordingly. It totally is. No one's going to let you get a great deal like that. Now, there's some times where you might, the market goes up post Corona or something 4 or 5 months from now, and, maybe you get more than you expect it. Maybe that's how it turns into a 50, 60, 70K deal. And that wouldn't be uncommon, by the way. So that's what I would lean on. So anybody else have any questions? Thank you, TJ. It was really awesome stuff, man. Hopefully that's good.
Yeah, not awesome for me.
Well, it's an awesome lesson. Forget the deal. The lesson's good because honestly it is like for you, next time you're in that situation, it's just going to be about keep dialing it in until you get it right with that, because it's a tricky situation that every day I fight with.
All right.
Hey, Petey.
Hey, Mike.
Hey, man.
Yeah, how'd you know?
You popped up.
Oh, gotcha. So we're wrapping up with framing now. Obviously, the framing inspection is not going to be done until we get all the rough-ins for HVAC and plumbing and electrical. Now, how do we pay for the framer? Do we just pay him what he's or do we retain some of that money until after framing inspection?
Well, your inspector came through and looked at his framing and told you what you need to do, right?
Right.
He,
But
he
now he
did
was
those
saying,
things.
yeah. So he did well, not no, he did some things correctly, some things messed up. So I've had to go through it over again with him again.
Yeah, you needed to get him to do it exactly how
Right.
how the guy wants it done, because when the inspector tells you to do something, you get away with some other stuff that they might not be paying attention to, but you got to do exactly what they tell you to do. So if you try to do anything differently, just tell them, look, I need you to finish it. And if he doesn't want to finish that, then pay someone else to come in and finish it right. Because the
Right.
inspector won't usually change their mind when they come back.
Right. Okay. So but after they're done their work, you just pay them in full, or do you wait till
As long as you,
framing inspection again?
I do usually pay them in full, because for the most part, I know what's right or wrong. And I would say that you're in a unique position to know what's right or wrong also right now. If you don't know what's right or wrong, then, it'd be like a video with me, or you can get a home inspectors, like a thing I've had to do in the past. You can hire home inspectors that actually know what the code is, and they'll come in for like $100 and look at it and tell you like, yeah, this will pass inspection. This is good. And because I usually, like, if I really want to get like gangster about it, but the framing thing, I think you actually have a really good understanding of like whether it's going to pass or not, because the guy already came in and told you what it would take.
Right.
So yes, once he does the things and you feel comfortable, I would be willing to give him the money, knowing that like if there was a need to do a small thing or two, you might just have to pay him a few bucks. Because sometimes we have to pay to get small things done, right? We have to,
Right.
changes that, but we're okay with that. That's not the end of the world.
Gotcha. Okay. And then actually that answers my question.
Okay.
Hey, Mike.
Hey.
What brand earphones, microphone are you using?
These are for my iPhone. So these are just the simple like earbuds for iPhone.
Okay.
They're like $40, but they work really well, to be honest.
I've got JLab wireless, and I suppose I could use those with my Mac possibly.
Yep, you certainly can.
Okay.
You can, and it'll usually just have like on there you'll see audio, and then it'll just pick up like, or actually go to the top of your Mac, and there's a Bluetooth little sign next to the Wi-Fi sign.
Right.
And hit that Bluetooth and just say connect them, and you'll be able to hear, and they'll be awesome.
Hey, Mike.
Hey, what's up, David?
Do I I'm doing the scope of work. Do I get rid of the oil furnace and just go with an upgraded panel and just do a 4-ton heat pump unit there?
Well, you don't need a 4-ton, so no.
Or 3-ton? No.
You need 2.5 ton. So tell them to stop trying to sell you more.
All right.
Oh no, you don't. What is your size of your house? Sorry.
No, yeah, mine's like 2,200 square feet.
Upstairs, you don't have 2,200 square feet above grade for sure.
No, through the whole thing though, because we're running heat throughout the whole.
The basement doesn't count. You don't ever do. You only count the above grade square footage.
Oh,
what
yeah.
What do you have above grade?
Well, it says on the tax records 2,027.
2,027. So you do have 2,000 square feet.
Yeah.
So then you need a 4-ton unit. I don't know if you do it that way. I feel like you're running into like trying to, the panel's good that you got, and it's a 150 amp panel. So I don't think it's a big deal just to put it out, you already have, first of all, you already have a unit. So I would just put back what's existing or what would have been there. It's the simplest thing to do.
Okay. Well, that was baseboard heat, so I'm getting rid of that. Because
God, yeah. But where the unit is currently, right, there was actually oil ran to it. Whatever it was that someone stole. It looked to me like that was an HVAC unit. And funny enough, there's actually an oil running to that. So that baseboard heat might have been like not good, or maybe not even working. Might have been a secondary heat source, because where you're missing the unit, it also had a little, if you look, there's a little copper wire. That's the oil wire. Or a line. It was run right to that unit, and it was chopped off like they stole it for the copper. And so it suggests that maybe there was an oil unit there that was a heating source now too. People usually do.
Okay.
When they do that, they won't actually take out the old heating system, and now they have two. Like Samara sold a system, and she didn't have two. So she ultimately she just left two of them in the house. She had two ways to heat it. That's not uncommon. So I would probably go with that, because I feel like you're going to get into a box of worms it's going to be expensive. It's going to cost you like $2,000 to put a new thing in there. It might also be like cause you to have to pull permits. Personally, I probably just go with what you have. It's not going to stop you from selling the house.
Okay. Sounds good. Okay. Thanks.
All right, cool. So who else can I help?
Mike? Yeah, I have a question. So yesterday, I see the video you did, the house, you add like a master bedroom in the basement of that house. When you mentioned about the exterior, the patch, like my house has the concrete pads from garage goes to the backyard. So the concrete pads are old, and also some are like a brick. So do you think how should I make it nicer?
On the outside of like walking out the basement, you're saying?
No, walk from garage, walk to the backyard. That concrete pads will pass. Walkway.
You have a concrete pad. Oh, you have a concrete walkway walking around
Yeah.
the garage around to the back of the house.
Yeah.
Okay. And it's all like cracked up or something.
Some are cracked. Yeah.
Yeah, I mean, you can just, what I've done, and I just did it recently, and if I'm at the house tomorrow, which I might be, I'll send you a picture, but essential, I'll be there the next day, like Thursday probably. You can just go like do a layover over it, like a 1 or 2 inch layover over it, and then it makes it look like new. And you can patch it up, you can lay over, you can do just a quick like patch of it even, and it makes it, it just fix the cracks. I mean, you have a little more expensive house, or you can just replace it. If you replace it, it's not going to be overly expensive if you get a cheap guy to do it. You're talking about 1 day to do it, and one guy could do it by himself. You could do it all in a day. So somebody $300 to $500 in labor, a couple $100 in material if you want all new concrete there. But you probably could patch it, just make it look nice. It really, normally I would 100% say patch it to anyone else in the group, but knowing your price point, I'm more like maybe do it properly and do it right, because your price point's a little higher, and it does they have a different expectation. If I at a $300,000 to $400,000 and under price point, they couldn't care less if I just patch it. I've literally never had anyone complain ever about it.
Okay. Thank you.
But not so sure at your price point. Maybe you can get away with it, maybe not. But I don't think it would be a deal killer for you if you did patch it and made it look nice. I'd really focus on the things I make sure at any level, and this kind of is a secret to selling like even a $700,000 or $800,000 home. You're just making sure the kitchens, the bathrooms, and everything else, you really nail it with those, and really make sure all the little details of the work is done nicely. People tend to care less about a concrete walkway as long as it isn't awful looking, right? So if you just take and make an attempt to patch it and make it look nice, it takes the attention off of it. It's not that big a deal anymore. It's also not like something they're worried about. It's not like in their living room or their kitchen, right in the middle of their entertaining space. So they tend to let things slide more when it comes to that kind of stuff.
Okay.
Okay.
Thank you.
How about anyone else?
Hey, Mike. I know we don't supply washers and dryers to the house, but will you provide the hookups for the washer and dryer?
I do, yeah. You want to have some hookups there so that way they can just put theirs in, but I don't. Yep, so you do want to have some hookups.
So whether it's like the 220 or if we do the gas for like a gas dryer, we should still.
Yeah, you have a gas dryer. You can also, do you have gas in there?
Well, we have gas, but I guess it would be easier to just have the electrician put in the 220 volt outlet.
What was there? I remember that it looked like the washer and dryer was over like right behind the steps from what I remember. What was there? I mean, is there something running to it now at all or nothing?
There was no washer. There was one washer and dryer. It was set up as a 2-unit. So that was upstairs in one of our bedrooms. But how we're going to have it now, the only practical space really seems to be in that unfinished basement.
Yeah, I agree. That's a perfect place to put it. Now, did you have a 220 wire running to the second floor?
I do not recall.
Yeah, I don't remember seeing it. So I'm just wondering how they were like doing
I know there was a gas fitting up there.
Yeah, there was gas on the on the top floor.
Because that was a 2-unit. The way it seems like it was set up was a 2-unit rental.
Okay. And where's your box at in comparison to where you're putting the washer and dryer, the electric box?
It's downstairs across the basement from the unfinished corner.
So it's literally on the whole other side of the basement?
Yeah, the back right. If you're looking at the house, it's to the back right.
Okay. So, I mean, what you want to consider when you run a wire for that 220 wire, it's kind of expensive. Like it's like $10 a foot or something. So I don't know. That's like, it might be $200 just for the wire and then the labor. You might be paying $400. So just ask and see. If it's
Right.
like $400 to run the wire, and it might be more convenient to just run the gas. And again, like gas is always better if you can get gas. So whatever's cheaper is what I would do.
Okay.
And then obviously you have the benefit if the gas is the same price, it wouldn't be like taking any electric from your electric panel and overload, so you have plenty of
Yeah.
that.
That
So,
makes
I mean,
sense.
just see which cheaper is really that once you get a plumber and electrician and ask them both and see what they would
Right.
charge you to do it.
All right. Thank you.
Okay. Who else has some questions?
Hey, Mike.
Hey.
So I wanted to hear your thoughts about using LLCs when purchasing, because I just never asked you about it, and I kind of want a little clarification.
You should use an LLC when you purchase. I mean, I bought my first house in my personal name, and I've bought some houses in my personal name since then. But for overall safety purposes, there's no reason not to use an LLC. There's no downside to using one. You can go online and create an LLC for $150 right now in about 10 minutes. So it's a pretty easy process to do. And so it makes almost no sense not to create an LLC. With that being said, LLCs probably make you look a little more professional. In general, when you're making the offer, the LLC is going to be better than making it in your personal name. So, I mean, I use LLCs. I mean, they say that you have a lot of protection, but what a lot of people don't tell you is no matter what, if somebody wants to sue you, they can sue you. I've had things in an LLC and then they just try to sue my other company. And I was like, I didn't even own it in that company. And they're like, yeah, so what? And they didn't win, obviously. They just, wasted a lot of my time and a lot of my lawyer money. And they kind of won that way, I guess, by annoying me. But they could never win. So the point is but the LLC does make it like if someone sees it's in your personal name and you actually have some assets, then it makes the lawyer more open to wanting to sue you. So this is really what you always want to consider is like, how can I look a little more harder to sue? The LLC makes you look harder to sue because if the LLC has no assets and, you don't have all your personal wealth in it, it's smart to do that. So I would say that everyone should get an LLC, but what I wouldn't advise, and what I would say that I learned the hard way is you don't need any kind of special LLC. You just need go to your local taxation office. Almost everywhere does it online, and you just get an LLC from your state, right online usually, or go down to a taxation place and they'll give you an LLC. They give same day, generally $150 here. I've never heard of it being more than $200 anywhere, any state. And it's like if you go there in person, it's a couple-hour process. You're done, maybe 2 hours. And if you do it online, it's 10 minutes. If they're doing, I used to go down there personally and get all of them. And or you can get your tax guy to do it for you, and they'll probably charge you $300 or $400 to do what you can do yourself. So I used to get my tax guy.
People say that they put each house in a different LLC. Are you is that something you suggest, or do you just recommend starting out, just get one LLC and as I purchase?
Just get one LLC, and then obviously if you don't have a ton of houses in it, I'll just tell you what I'm doing. I don't recommend anything because I'm not a lawyer or a tax guy, but I will tell you what $30,000 of asking questions and taking a lot of time from lawyers and tax guys. What I discovered is that the same thing we're having happening with Corona right now, and this whole people scare you into buying shit. Right? They're like, if they scare you, you'll open your checkbook. They told my partner, and my partner had done 600 flips at the time. They told my partner that his LLC was going to get sued and he would lose everything. He was 20 years older than me. And he's like, so he comes and he met with these people from a place called NCH, Nevada, LLC Corporation, some place that sells you this stuff. And he ended up spending $10,000 to get them to do an LLC and some other stuff. And he was like, no, but I'm protected. He told our lawyer about it the next time we seen our lawyer, and our lawyer laughed at him and said, dude, I thought you were smarter than that, Jay. He laughed at him. You spent $10,000. You're no more protected. He says the difference in the protection you have now versus the protection you had when you just did a regular LLC is like the difference in being struck by lightning 3 times in a row in the same place. He's like, you basically have gotten no value for all that extra money. So you're paying 20, 30, 40, 50 times more for it, right? To get an LLC for $2,000 or $3,000, but you're only getting very, very tiny bit of different protection from it. Almost none really. So it's definitely a little scammy if they try to sell it to newbies and newer people. So, knowing that, he basically, what his recommendation was for us is obviously if you start to have a lot of houses, you wouldn't want to put them all in one LLC. But he felt like it was a little bit unpractical to create an LLC for every property. So he's like, hey, if you're just doing like one house at a time, maybe you overlap and one leaves, you know, that's fine to have like your business ran from one LLC. I personally run my business today from one LLC because the houses are going in and out. It's not a big deal. I'm not maintaining any rentals in that LLC. I'm not maintaining anything that would be of net worth. So, you know, I just have houses in it. And the houses for me, like, you know, you have a house, you have a loan on it. So like a lawyer sees you bought a house and you got a loan. That's not like if you own a house outright, you might want that in a different LLC. Like if you're renting something that you own outright, that's where you become more of a target to be sued, is when you have a lot of wealth. So then you might get more aggressive with it. But most people I know that are really doing this at a high level are doing more than one flip at a time out of an LLC. But like I have like 2 LLCs, maybe 3 that I'm doing all my flips out of, which is I often have anywhere from like 8 to 12 properties going at a time. So, you know, I'd say you're okay doing this right now if I was just giving you advice, but depending on who you talk to a lawyer like mine who was kind of smart and just wasn't trying to sell me anything. You know, totally. And I talked to this other lawyer who we liked and trusted, and he was like this real estate guy. He's like, I need a trust, he told me. And we ended up paying like $4,500 to get him to build a trust. You know, it's like they're always selling you on something, right? They're selling you on the fear of like, what if you lose everything? Here's the best thing to know. You're not rich, so you're not really a target.
Yeah.
So you got a lot of net worth, and you might be, so spend accordingly on your asset protection according to your worth, right? Brian actually said to me, I remember saying he was really excited about Fortune Builders teaching you how to protect your assets. Like, you don't need to protect assets you don't have. Like if you've got a net worth of $1 million and it's like, and it's liquid, yeah, you better get a strong plan, right? You better spend accordingly. You might even spend 10 or 20K a year in like, you know, all kind of like high level like protections. But spending like I don't know, more than even 150 to 300 bucks a year on just protecting your normal net worth, well, lawyers aren't going to make you a target for that, right? I mean, so landlords have a different situation when they own 100 properties and they got like $1 million in equity. They're going to take a little different approach, and they can afford to do so. But when you got one flip going on and you're just like an average person and there's like a little bit of cash, you're not broke, but you're not rich, well, you're not as big of a target.
Okay, thanks, Mike.
They got to get paid if they win, right? They got to know you have expendable cash. And if they identify that you don't, most lawyers won't even take the case, even if it's winnable, because if they can't collect, it doesn't matter. So that's the thing. LLCs kind of hide your net worth. So the more net worth you get, the more LLCs you'd want to use and the more protection you'd want to create. So yeah, great question. Thank you. And let's see, here's a question. It looked like it came in from Marlo. It says, Marlo, Golden Ring Road.
Oh yeah, Mike.
Oh, cool. Yeah, what is that about?
Yeah, that was just a deal. It looks like, I mean, interestingly enough, I mean, it's actually like the wholesaler who sold me Justin. He just like kind of just randomly texted me.
Yeah.
If I'm looking for a deal, and he kind of just sent me this information just now, actually. So just wondering if we can maybe like run through it real quick. It's a deal. Looks like it's an off-market deal. Yeah.
After 7:15, I charge $5 a comp. It's tight times now. I used to do these for free, but it's tight times now, man. I'm like, I got to charge a Corona fee, and I'm stuck in the house. I mean, really, I probably should be comping for no reason. Oh, I got nothing else to do. I don't know how I'm so busy sitting in the house so much. I have actually gotten more work done than like ever. Now, like chilling. It's kind of cool. Yeah, cool. I'll take a quick look at it. Golden Ring Court, Rosedale. Area is good. Is that a single family or a row home?
It's a detached single family.
Oh, it's detached.
It's kind of like a small, looks kind of like a small rancher.
Let's take a quick look at it. The area is good. I know that much. Is it listed in? Let's see. Did he actually put it on the MLS? That doesn't look like it. Okay. Do you have any pics or anything of it? Or, here's what we can do. You know what? Forget that for a second. So if you don't actually have any pics of it, like it's not on the MLS, what we normally do is just copy and paste the address in Google, and you can get like the Google Earth of it usually. So it's like Golden Ring Court. No, that's not it. Oh, 1904, right?
Oh yeah. You actually emailed me some pics.
Yeah, we should be able to find some though usually, but let's see.
You sent me an email with like a Google Docs.
Is that what it looks like right here?
I went ahead and forwarded it to your email.
Is this what it looks like right here?
I don't see it.
Oh, you guys got share? Can you guys see my screen?
I can see it.
Okay.
Oh, there it is. Oh, it's coming up now.
Okay, cool. So it look like this little brancher right here, something like this.
Yeah, pretty much.
Okay, let's see. It should
Yeah,
tell
it
us
looks like
like
that.
it says that it's 1,528 square feet. Gold, you know, the Zestimate's 197, so that should make you feel good. So, well, I mean, here's a comp, but I really wasn't looking for the comp because I was really just looking to see what the house looked like and the size and square footage, right? Because that's what matters. So now I know it's a rancher. It's 1,500. It's exactly the same as this comp. So as we go through these MLS comps now, see if we can get back to the actual MLS comps, we'll know if the house looks like ours, because the first thing we want to do is identify homes that are similar to the one that we have. So we know we have a 1,500 square foot rancher. That's very common for that area, by the way. So quickly we know, like, okay, that one's a little bit different. That's completely different. You know, these are close enough, but not really quite the same. But this should be very similar, actually. A rancher and this should be similar. But let's look for some ranchers and see if we find any, because it'd be nice to find something very similar to ours. That's a very different house. This has 2 stories, very different. See if this Wayburn, how that looks. Okay, that's again 2 stories. And here's our first 1 story, and it's actually on your street, which is cool. I happen to know Golden Ring Court. It's actually, I almost did a flip there, or I did do a flip there. And see this one, exact same as yours, right? Same, it's actually even a little smaller, don't even seem to be as nice. So the thing about I'm being really picky because I want to make sure I'm comparing apples to apples. This one looks even like, I don't know, that looks just like yours. That one's close enough. That one's exactly like yours. So we're starting to get, you see how we're creating this picture by picking homes that are the same. So all I'm doing, you see, I'm just like not looking at the ones that are different. This is how you get really confused whenever you comp, is when you start looking at this house and ones that are, I mean, technically, right? If we go all the way to the top here, technically this house is the same square footage, right? I mean, it looks different though. So if we were to use this, you know, I'd be concerned. It's a really high comp, and you could use that really high comp. And this one looks clearly different. This doesn't look too different, but it is, right? So what I want to do is I want to use comps that are actually exactly the same to start with, because there's plenty of comps that look like my house. So I don't want to use ones that don't look like my house when that's the case. So let's narrow this down. And then I just want to show you how the picture clears up, right? See how our picture just, I would have been really confused. That one house looked really like a great comp at 320, but look, when we only pick homes that are exactly like ours, look what happened. Like we're tops 255, bottoms 230, 225, right? Probably not as nice a house, but so we got a range now that I think makes more sense. I happen to know the comp, so I'm just walking through this to show you. But with that being said, you see how easily I could have taken and seen a very different picture, a very confusing picture. And this is why comping is easy when you eliminate the things that don't look the same. Now, if we were to go into these comps and I couldn't find any ranchers, then this comping would become more complicated. But I found 7, and these are really good comps. So let's start looking at them. Let's look at each one and see if they're rehabbed, what condition they're in. So this is actually a rehab. Perfect, right? So it's just what we want to see. Let me make the screen a little bigger. But somebody rehabbed it. This looks like it's, you know, good of a job as Marlo would do. So, you know, we're comparing apples to apples. They did not open the wall, it doesn't look like. So they, you know, this layout, well, it looks like it's, I don't know, it don't look like it's a perfect layout. They didn't stage it. There's a couple things they didn't do well, but they still got a really good number. They got a finishable basement. You can finish your basement too, right, Marlo?
Yeah, it looks like you can finish it up.
Okay, so let's take a quick look at the tail of the tape on this one. 255 is what they closed it at. It's a 5.2. I'm assuming if we look real quick that you had 2 of those. Let's see, I don't know if they're going to tell us actually. They don't tell us, but I would assume that like probably at least 2 of those bedrooms are more in the basement. It's the kind of a thing people are doing now. It's only 1,100 some square feet and 500 in the basement, so it's not even as big as yours. So that's kind of cool to know. 9.19 for the lot size. That's similar to yours. It did sit on the market 42 days. They tried to get 264 for it. Okay, and it wasn't really the best rehab ever. I feel like your rehab clearly would be better. This sold in 19, so this is a pretty recent comp. It looks like to me, I don't see any seller give back, so they did actually get 255 for it. So it's pretty awesome. It's a great comp, 255 for that one. It's the only one at 255, but now, and we might use that number because like the first one we're seeing that's sort of next to it is not as good. Like this house doesn't even have a second bath in it. It looks like your house. Oh, it's got a built-in pool though. Hold on, that's pretty sweet. Yeah, that's nice. Well, so this house is like hard to compare because it's a very nice homeowner house, but the reason they got such good money for this is because of that built-in pool. Because a built-in pool for that neighborhood, to have that, I don't know, it feels pretty cool. Somebody loved that. So we're gonna have to pass on that one. because of the built-in pool makes it, it's really not a rehab. It's not really comparing apples to apples. The first one was actually exactly like your home. Now this has some weird additions in a garage or something. I don't know what's going on with it, but they just threw some like a lot of extra stuff on. They got a little build happy. It looked like it was a really tiny house to start with, and they made it bigger, but it is rehabbed. And, you know, it is very much apples to apples, a little bit different looking, but I think it was smaller in yours and they just put some additions to make it more similar. You can see they got that garage and stuff. It's a little bit weird. Now, that being said, they got $247 for this. It's a 321.
Sorry, I couldn't quite hear you.
Ask me questions randomly. Siri, it's same square footage almost, 321. I'm sure you could at least be a 321 based on what you have. They sold this property for close price 247. They gave 11 backs at 237. Yeah, I don't know. So that's 237, 721 days. And it sold 1119, so it's pretty recent comp. So I don't know if the house is perfect, but so you can see we don't have super strong comps when we get high up, but now this is a rancher. It's got a little thing on it. It's a 3-1, by the way, so it doesn't even have a second full bath, but it is a rancher. It's very nice. Actually, it's not really rehabbed, but it's very livable and nice. They have not opened the wall up right here, which I would open up and make look. In the kitchen is very well kept, but it's original. You see these original cabinets. So this is a great example of just a really well taken care of home that's not really rehabbed. I like to see that, by the way. That excites me because when I see like the basement, they haven't even painted that. So that's very out of date. They, you know, it looks like, you know, it looks 30 years old. That's not really of any value. Okay, so that comp for me is the first comp that I've seen that is clearly not as good as your house, right? I mean, just condition-wise, bedrooms and baths-wise, it's less square footage. So I love this comp because what it's done, it's created a bracket for us, saying that like they got what did they get for 245 minus 5, so they got 240. So I would probably think your ARV is sitting at, well, I don't know, what do you guys think? All right, let's hear what you guys have to pull into this. And you did send me pics, so let's look at the pics so we can get the rehab costs while you're doing that. But I'm going to get the feedback from the group on where you guys think we're going to sit, if I didn't give you too many hints. And did you send me, it looks like you sent me something, but oh, there's the Google Drive right there. Anybody have any opinions on what you think the value of that ARV is? Oh. How much do they want for this, Marlo?
It might be overpriced. 175.
Well, it's a wholesaler. It's always overpriced if it's a wholesaler. Okay, how many beds and baths is currently in it?
3, 1.5.
Okay, so I mean, it is actually in really good condition. I mean, like we've seen some comps. We've seen some comps that were really, like, you know, I mean, there's some comps that suggest you could probably clean this thing up and, you know, almost sell it the way it is for probably $235. But, you know, unfortunately, they're trying to get like top dollar for it. I think they're overestimating. They got to leave some juice on it for you, right? I mean, and it's a very nice home. I mean, you got two ways you can go with this home. You probably could put 20K into it and make it like a 235, or probably put like 40K into it and make it like a 240, 50 maybe. So, I mean, you know, maybe it would be 250 if you put 40K in. So, because there's really no rehab selling. This is a really good area and there's not a lot of rehab selling. So, I mean, yeah, you know, it's a wholesaler. So bottom line is they want 175 for anything. It's probably too much. So if we said 250, 40K in work, hopefully this is not set up incorrectly. Yep, there you go. So you'd be offering 137, you know, 141 would be pushing it. Yeah, so about 141. So you're about 30K off, which is pretty normal for a wholesaler. But I'm sure they're going to try to show you the 400K comps and tell you it's only 5,000 to fix up. That's just what they do, right? That's generally what wholesalers do. So it looks like a standard wholesale deal. It all adds up to me that they want 30K too much. I still would tell them where you'd be and just see what they say and, you know, go from there. The fact is you rarely ever get deals done with wholesalers, but if you are going to get them done, the best way to do it is tell them where you are, and sometimes they'll come back to you. They clearly, however they got this, they clearly overpaid for it because it is a pretty nice home. But 175, I don't know any investors paying 175 for those.
What'd they pay for it?
I don't know. It's probably, if they're trying to get 175, they probably actually paid more than they should. But they'll never tell you that. It really don't matter what they paid for it. It only matters what it's worth. I've had, like Darshan, who was on the call earlier, he sold me a house in Linthicum and he made $55K assignment fee. And you think I was like, well, Darshan, I need to buy it cheaper because you're making $55K. I didn't care.
All right. Remember,
It was worth what he sold it to me for, and ended up making really good profit. There's been many times that, so one of the things I used to hate when I would wholesale a deal, I had a guy tell me, if you're making over 15K, I don't want it. And he was like, then what do you think he did 30 days later? Hey, why aren't you calling me and giving me any deals? I was like, because I want to make over 15K, and you said you didn't want me to call you. He's like, well, I don't know. I just don't think you should be making that much. I'm like, dude, whatever the house is worth, it's worth. If I buy it for $1 and it's worth 100,000, what do you be like? I got to sell it to you for 14,099, so you'll be happy? That's not going to happen. If it's worth 100K, you're going to pay. You pay what you'll pay, period. And it don't matter what I got it for. So it really doesn't. Now and these guys are pretty smart wholesalers that he's talking about. They're not newbies, so they're going to try and get the best money they can get for it. At 175, I'm thinking they're going to get some pushback, Marlo, and they're probably not going to get that number. So it might be worth talking to them. But you can see it's only like a 30K deal at like 140. And believe me, my numbers, I've done stuff on that exact street and in that exact area. My numbers are, I would say, probably highly accurate. So yeah, so at 140, I would say you're whether they'll sell it or not will be a different story. They could find someone to overpay it since it is pretty clean. Okay, yeah, that makes sense. That's what I thought. Appreciate it. Yeah, cool, man. So everyone who's looking for deals now, we're gonna start looking, and I'll probably be sending a text out to the group of people I know looking for deals, and we're gonna start doing like some extracurricular work to try to find some. So I'll let you guys know about that as it comes down. I'm gonna be doing it probably Thursday and Friday. My mom's got to do a little bit of surgery on Thursday, so I'm just trying to figure out where we're gonna go with that and how that's gonna work and everything before I start committing to anything, because my schedule will be a little like, who knows what I'll be doing. But Friday at latest and Saturday morning. If not, I'll get it done either way. So look for a text from me, in the next couple of days, okay? Also, I'm interviewing a bunch of hard money lenders for the group. I'm doing that over the next week. I already got 9 that I've identified because I want to talk to them and just see how, if anything's changing or anything's different with them. What we have seen briefly is that the nationwide lenders are definitely pulling money back, but the more private local lenders are not so much. They, are pretty much still doing their thing. So seem to be okay, right? But, local lenders, who knows? So, local lenders seem to be better. Nationwide lenders, they're always sketchy, right? They're always like kind of go with the wind. If things are good, they're here. If things are even slightly deemed to be bad, they just get out. Private lenders have been through all this stuff, and people that are hard money lenders are usually pretty savvy real estate investors, or have been over the years, and so they generally don't get too insane. What other questions do you guys have? We have time for about one more question, then we'll go eat dinner, or late dinner. Well, no questions. We have a call tomorrow. If you guys, we'll get a text tomorrow morning and tomorrow evening, and it's 6 o'clock Eastern Standard Time. And we'll basically have a panelist. I have a couple experts coming, and I'm going to question them and kind of put some challenging questions to them and have a discussion around the market, what's going on. You guys hear me talking about this a lot because, we need to be talking about it a lot. I fully believe we're in good shape and the market's strong and there's a lot of awesome stuff happening. With that being said, you'll never hear from Mike being naive or unaware. Right? Because I think that's how you lose a lot of money in this business, is like sometimes just being in denial or not paying attention to what's going on. I did survive 2008 really well, and I have a lot of friends who got bankrupt in that year. And if I had to say there was a reason for it, is because I do pay attention and I do adjust as I see time to adjust. So the best way for me to be your best coach is for me every day I'm spending time researching, looking into this, getting even more clear every day on the subject. I'll probably keep doing that for as long until this thing's just clearly behind us, because if there's going to be any effects of it, they won't happen overnight. And as they start to happen, I want to be the first one, like on the front line, that's really got my ear to the ground. And, I'm just paying very close attention to what's going on. Because again, like we told Tom earlier, there's no such thing as a bad market. There's just different ways to invest. And if we have to make any kind of pivot in how we invest, you will know before most other people, because I make it my business to know, because I have a lot of houses going, and if there's a little shift or a tweak we have to make to our strategy, you'll definitely know well before it ever needs to be done, right? That we don't want to be the last to know. That's a really bad place to be. Like somebody telling you like 6 months after a crash has happened, like, hey, you know, the market crashed, right? No, man, it's still good. I heard somebody say it was still good. I think I'm going to make it. I think it'll be fine. You don't want to be that person. So there's not likely a crash coming. There's probably likely an adjustment we'll need to make. So I'm doing a lot to make sure I know exactly what that adjustment is. And I'm looking at it from both sides. I'm looking at it from the, way over hype side, and I'm looking at it from maybe probably the way under hype side, right? So I can find a nice balance in the middle. So I might even do another panel, but these guests coming tomorrow are pretty smart people, been in the business. I got somebody from the mortgage industry. I got somebody from a mindset guy who does a lot of flips, but he really focuses on mindset. So he'd probably be really helpful for us. And I also have someone who's done over 1,000 flips like myself, which is hard to find people who have done that much volume, but he's done a lot of volume, and love to just hear his take on it. He's from a different part of the country. So it's going to be pretty cool. There's some things that shifts we'll need to make. So make sure if you can, you attend. But you're in the group, so if not, I'll make sure I tell you what they are. And I'm really excited to talk to some other people about it. I have been talking to many other people privately, and now I decided it would make some sense that Tanya overheard me, and she was like, it's really interesting. You should actually share that with the group, and that's why I decided to share it. It'll be with the group and really the community in general, okay? So you guys will have a link text to you, and if you want to get to it before then, it's on the Facebook group, so you should see it posted as a Q&A panel on the state of the market, state of the real estate market, okay? Everyone have a good evening. I'll see you guys later.
See you, Mike.
All right, everyone.
Thanks, Mike.